Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, December 19th, 8:48 a.m. And folks, it is the day after December 18th. And today is going to be a very interesting day because not only do we have a ton of macro data to discuss, not only do we have Mr. Dan Ives joining the show at 10:30 a.m. Eastern Standard Time. So about in an hour and a half, we will have Dan Ives on the show, and we'll be talking to him about tech and everything going into 2025. But today is a very important day because December 18th potentially might have been a mini version of August 5th. And there's a lot to talk about. There's a lot to analyze. A lot happened yesterday. And I think it's very important to kind of break down why it happened, how it happened, some of the logic behind why it could continue to happen, and what that means for equities in the second half of December, which is basically 10 to 11 days left, and what that means going into the end of the year. So we've got a lot to talk about. We've got a lot to get into. We've got a lot to analyze. We also had Japan that made some decisions last night, and all of that ultimately is going to have a ton of analysis in regards to what that means for equity markets going into the end of the year, and also what that means for the crypto markets going into the end of the year. Thank you, everybody, for being here. We got a lot to talk about. Let's get into it. I know you guys can see that your boy had to dress up a little bit like Mr. Dan. We have to make Dan feel comfortable on the show today. You know, he can't be the only one dressed up in a colorful way. I had to make sure he feels like he's welcome here. This shirt, I actually had this shirt for the OGs that are from the Market Open like a year and a half ago, and I stopped wearing it because I just stopped wearing fancy clothes, but we had to bust it out today for Mr. Dan Ives. So 10:30, he'll be on today. We'll be talking to him. That'll be super fun. Also at 11:30, we'll have some of the Palantir employees come on. That whole segment I talked about ontologizing Amit. There's going to be a long Market Open. This is going to go to 1:30 today because we're going to spend 2 hours with them actually building an ontology around me and then using AIP to build use cases on top of that. So it's going to be a very long day. A lot to discuss, a lot to talk about. But I am excited to be here. Thank you, everybody, for being here this morning. Good morning, good morning, good morning. Matthew, what's up? Player One, Nolan, Deefin, Drew Nation, Potts, Iceman, JJ, Dominic. Thank you all for being here today. We got Dean, Matthew, Quarantined Quartet, Ty Gordon, Elaton, For Real, Phil, Marcus, Nicola, SW, Jason, Midwest, Legacy, Jose. Thank you, everybody, for being here this morning. Let's get into the Market Open. Okay, so first of all, before I even get into everything I want to talk about, because there's a series of sequence of events that we have to get into to kind of break down where we are at today at 8:51. How's everybody feeling? How is everybody feeling? One word. How is everybody feeling? After we went through a pretty tumultuous FOMC meeting yesterday, there was a lot of people that were on the Market Close stream yesterday, and you guys saw my frustration with the fact that Tesla was down 11%, but Fartcoin was up 6%, which honestly was probably a signal that the market's not going to be down too long if Fartcoin still has the liquidity to be up, even though the stock market's down. It actually, quite frankly, I didn't notice at the moment, but I probably should have said, wait a second, algorithmically, this is most likely stocks being sold off, but the rest of the broader ecosystem of finance is not really fazed by this because they just don't care. But stocks always care from an algorithmic perspective, but that doesn't mean that's real. And so Fartcoin being up when Tesla was down probably was a little bit of a sign that maybe we would have somewhat of recovery. All right, so I'm seeing a lot of buys in the chat. I'm seeing a lot of relieved, anxious, tired, nonchalant, some scares, some patience, just fine, resilient, buying. I see a lot of buying. Fantastic. Is the Fartcoin metric correct? Is the Fartcoin metric? Okay, cool. So let's get into it. Here's my thoughts. I think that yesterday was a little bit of an August 5th. And that's why I, this morning as well, feel a little bit more relieved and not as anxious. And quite frankly, I was feeling this last night when you really analyzed it in terms of what was going on. So what actually happened yesterday? Let's do a proper recap on how the markets fell, why the markets fell, and why my bottom line thesis is this is a buy the dip. I bought the dip yesterday. I'll probably try to buy the dip today. This is a pretty simple buy the dip for me from a couple of metrics. I could be wrong. This could go down further. And at 9:30, we're going to figure out if the market wants to go further down or up. But here's ultimately what happened yesterday and how we should break it down. So the markets went down yesterday because the market wanted 3 cuts instead of 2. The market wanted 3 cuts in 2025 instead of 2. We did get a rate cut yesterday, which was very productive. We needed a rate cut. We got a rate cut. The problem was the market wanted 3 cuts in 2025. We only got 2. So when you only get 2 cuts instead of 3, you get a lot of things start to get priced out of the market, which means equities have to be sold off. And as a result of that, it just leads to a broad-based sell-off in terms of the pricing in of 2025 that is incongruent with the pricing in that the street had ultimately expected. Now, why did we actually sell off further into the day? Well, Powell kind of messed up the presser, and I don't blame Powell for messing up the presser, but his argument when reporters asked him, wait a second, Powell, if CPI and PPI is up, why are we cutting rates? Like, how does that logically make sense? If your goal is 2% inflation and we see inflation is going up, cutting rates only stimulates the economy. It AKA increases inflation, or at least keeps it afloat. So why are we not pausing? And Powell's answer was, well, the labor market was weak. The problem is he wasn't a good communicator. And Powell's been a relatively good communicator this whole year, having to navigate all the things he's had to manage. But this press release was not the best, or this press conference was not the best. And as a result, it was not enough of an argument to get the markets on board with justifying a cut. And that could have been the reason why they were really upset. However, when you really analyze what happened yesterday, this is why I think this was a mini August 25th or August 5th. This was a catch-22. If we didn't cut, markets would tank. Objectively, I think all of us can agree. If we didn't cut, markets would tank. But if we cut but lowered cut expectations in 2025, which we did, markets would tank because they would be wondering what was the point of even cutting. And that's very important to analyze right here. If we were going to lose no matter what, if we didn't cut, markets would tank. And if we did cut but lowered expectations, markets would tank. Then that means the market becomes irrational. When there's no way to win, the market is going to do what it does best, which is just irrationally sell off everything. And if that's the case, you tend to get a bottom pretty quickly because there's no reason to sell off. Let me say that again. If we were in a catch-22 where you're going to lose no matter what, we cut rates, we don't cut rates, you're going to lose, the market tends to get a little irrational. Why does the market tend to get a little irrational? Because at that point, if the market thinks, wait a second, every scenario that we play out in terms of the simulation of how the market trajectory can go means that things are bad, then that means the only result should be to sell off equities. However, that's not a real reason to sell off equities. That's an irrational algorithmic reason to sell off equities. A real reason to sell off equities is a pandemic. A real reason to sell off equities is a global war that's happening. A real reason to sell off equities is Amazon missed by 5% on AWS, and that means that cloud growth is not that strong. That is the real reason for an equity sell-off, not this irrational catch-22 situation that we were in yesterday. As a result, and a lot of you guys noticed this yesterday as well, by 3:45 p.m. Eastern, almost every single stock market or stock or index had made an intraday bottom. And you can look at pretty much every chart right now currently in the market. By 3:45, they had all found their bottom. Tesla's bottom was 427, and I think Palantir's bottom was $70.15. By 4 p.m., 15 minutes later, most of these names, including Tesla and Palantir, were up 2 to 3% from where they were down on the day, implying that algorithms, not fundamentals around people actually wanting to sell off their stocks. I don't think anyone thought that Robinhood at 43 was that much different from Robinhood at 35 within the span of 5 hours, which means it was algorithmic. I mean, it was a little bit of panic selling too, probably, but most of it was algorithmic, especially when all stocks bottom intraday at 3:45 and then a rebound by 4 p.m. So here's the bottom line. Could this be a bull trap? Yeah, it could be a bull trap, but here's another reason why I think this is a mini August 5th. By the way, Jose, thank you for the 10 gifted. Appreciate you, brother. Thank you for the 10 gifted, Jose, on the channel. A bunch of you guys just got a membership. Thank you, Jose, friend of the channel, for the 10 gifted. Jose, we'll probably have you on the channel either today or tomorrow on the market open, market close, and we'll talk about your thoughts on the semiconductor dip as well. So this is another reason I really think it's on August 5th. The VIX was up 600% that day on August 5th. Yesterday, the VIX was up 74%. What happened on August 7th? The VIX was down 80%. What's happening today? The VIX is down 40% in the pre-markets. So when you really put all of this together, it makes sense why yesterday was a little bit of a flash crash based on the VIX, based on the catch-22 situation that I just described. And what resulted in that? It resulted in some algorithmic selling. Now, why am I still relatively bullish going into the end of the year? Well, there's $7 trillion on the sideline. Q3 earnings across the market were exceptional with strong guidance for Q4. Oil is still at 70 and below. Trump is coming in with pro-growth policies. Yes, there's going to be some issues with inflation, with tariffs. The market will deal with that next year. But for the next 2 weeks, that is still a very good macro backdrop. AI is very real. If you don't believe me, ask Broadcom. They've got a massive AI opportunity. All the basic elements to be bullish on the broader thesis for this market have not gone away. The only thing that has happened is that the market needed, quite frankly, and I think everyone can reconcile this as well. Markets were extended and they need a reason to fall. I mean, I think most of us have seen markets at least for a couple years now where we can understand sometimes you're just on too much of a hot streak, and like valuations get up there, which they did for a lot of stocks, and markets need a breather. Now, was this even a breather? Yeah, it was a breather that hurt because the S&P fell by 3%, which was the most it fell in honestly, I think since September 6th. So it's been like 3-4 months, right? But it wasn't 10% down, 15% down, 20% down. It wasn't a major correction. It was just like, hey, let's just slow the brakes a little bit. Let's chill out. Let's have a little pullback and let's get back on our feet. And so from that perspective, when you put everything together in terms of why markets were extended, why the VIX spiked up the highest level since August 5th, the potential of a US government shutdown, which might happen after a lot of people yesterday didn't like the bill, including Elon Musk, that was put up by the government, and along with some other fears of volatility around Japan, which we'll talk about in a second because we didn't have the answer last night or at 4 p.m. around what Japan was going to do with their interest rates, that could lead to a bit of a sell-off. The other thing that's really exciting about this right now, S&P 500 in the pre-markets, let's just check how that's doing, is I think this creates a great setup for a Santa Claus rally. S&P 500 is up about 1% in the pre-markets. Why? Because it's easier to rally from down 4% than from all-time highs. It's easier to rally if the S&P goes back to 590 versus if the S&P is at 6,009, right? Like it's just like logically, you have more buyers that come in, you got more money that comes off the sideline, you have more people, unless there's a fundamental reason to sell things off, and then you have more selling. If that's not the case, which we just talked about why I don't think that's the case at all, then you're going to have an easier time for the market to naturally go higher because we're rebounding from a smaller level. So when you put all of that together, I think, and I might be wrong, at 9:30, we're going to see how the market reacts. But so far, the pre-markets are pretty much signaling that this was a flash crash. This was a mini August 5th. This was really a crash that had no justification to crash as bad as it did. It was a lot of confusion by market participants in terms of what's happening with JPOW. And that's why we saw some of the weakness that we saw last night. And quite frankly, again, by 4 p.m., by 4:15, everything started recovering. It's not like it fully recovered. Robinhood was down 10%. I think it ended the day. Where did Hood end the day? It's up like 3% of the pre-markets right now. It ended the day down, or it was down 12%. It ended the day down 10.9%. Still nasty, but now it's up 3.4%, and it didn't really, further continue in terms of a sell-off. Like usually when you have a bad sell-off, you tend to get a more further sell-off in the after hours and the pre-markets are red. That's not the case. I mean, a lot of people woke up today and they said, wait, why did we sell off stocks yesterday? Why did all these companies go down? Bitcoin fell below 100,000 yesterday. Bitcoin was at 98,708. Bitcoin's at 102. Why? Because a lot of people stepped in and said, wait a second, why should we sell off Bitcoin here? Like, what's the reason? What is the macro fundamental reason why Bitcoin's bad right here? And if you didn't have a justification, then, Bitcoin tends to rebound and the entire market tends to rebound as well. So this is what I'm thinking is happening right now in markets. I think it is a little bit of a buy the dip. We had Dan Ives as well, who's going to be on the show later. He said this is a simple bump in the road, and this is a buy the dip as well. This is not stopping the tech rally. The most important thing right here is that although there is a question around what the Fed is doing with interest rates and how we're going to decrease inflation going into 2025, because right now the Fed is basically forecasting that inflation is going to be sticky, and we have to deal with that. Does that stop earnings growth? And I think the number one thing that we've done a good job on the show at analyzing is, are earnings good or bad collectively for pretty much every industry? And outside of some outliers here and there, earnings have been phenomenal in 2023 and in Q3 of 2024. And if earnings have been that good, it's hard not to buy Google when it's trading at 18 times earnings because the Fed. It's like, first of all, interest rates really don't affect Google that much. Second of all, it's Google. They put up really good numbers. They're going to guide for more good numbers. They have this big AI revolution coming up. They're going to be a big part of it. It's hard to imagine that JPOW is the reason why we don't buy that. And, rational market participants come in, they buy that dip because that's an opportunity for people to gain some momentum or to gain some exposure. And that's what I think is happening right now. Now, on top of that, we got some macro data. All right. This macro data actually this morning was pretty good. GDP came in at 3.1% in terms of expectations versus 2.8%. That's bullish. The previous was 2.8%. We came in at 0.3% higher. So markets thinking that we're going to grow above 3%, which is incredible for the United States. We have a very big economy. For us to grow above 3%, that's great. Jobless claims, 220,000 versus 230,000. Less people filed for unemployment. That's also very good. Last week was 242,000. So it is significantly down by 20,000 from what we had last week. PCE prices previously was 2.5%. We came down to 1.5. Now the market was expecting 1.5. So that's good because we came down within expectations, but it's better from what it was month over month because last month it was at 2.5. That's a decrease of inflation, and PCE, quite frankly, is what the Fed cares about the most. Now, core PCE slightly went up versus expectations. The market wanted 2.1. We came in at 2.2, but last month was 2.8. So this month, we did see a substantial decline in inflation from 2.5 to 1.5 and 2.8 to 2.2, even if the headline CPI and PPI numbers didn't necessarily reflect that. And that's another reason that I think the market's recovering right now in the pre-markets, because this is pretty damn good data. If this data was the opposite, and if it was really hot, I could definitely see us going a little bit red. But when you put this data together along with the fact that it definitely felt algorithmic in terms of that market sell-off at 345 yesterday, you tend to get people that end up buying the dip. Now, here's the last thing from a macro perspective that happened yesterday. Some of you guys might not know this happened. This was announced at 9:30 last night, and hopefully some of you guys were sleeping, getting some good rest, getting to just chill, and not obsessing about what the Bank of Japan was doing. I was not doing that. I was eagerly waiting to see what the Bank of Japan was doing, and thankfully, because of their decision, when you woke up, you probably didn't even have to worry about it. The Bank of Japan did not raise interest rates. And this is very important. Why is this very important? Because there is still trillions of dollars carried into the yen carry trade. Again, if Japan hiked rates, the US dollar would weaken against the yen. Anyone who's short the yen would then have to sell off US equities to cover their short, which would have caused a decline in stock. They probably would have had to sell off some Bitcoin because a lot of people are borrowing against the yen to buy crypto as well. There is still tons of money in this trade. And eventually this trade will unwind, and maybe it will be pretty aggressive when it does unwind. But at least for now, I don't know who gave the Bank of Japan a call. Maybe it was Trump. Maybe it was BlackRock. Maybe it was Vanguard. They were thinking of raising rates. This was not a done deal that they weren't going to raise rates. It was kind of like 60-40. There was a good chance they would have. And I think someone tapped them on the shoulder and they were like, just chill out. Just not yet. Do it in January. Don't mess up Santa Claus rally. Not this year. And as you can see, as soon as the decision came out, USD to JPY went up by about 30 bips, and all was good in the world. Santa Claus is hopefully getting ready to still come, because we don't need to worry about Japan messing up Christmas. Why are people short the yen? It is easier to short the yen than to borrow money at an interest rate that is, that would cost 5 or 6% at a bank to borrow the money. And in general, there are people who have, and a lot of hedge funds and institutions who have perfected the art of going short one currency, going long another asset against that currency, and really being able to manage their spread and their risk, as long as nothing gets messed up in that country to increase the value of the currency that they're short on, right? Which is what happened in August 5th. That didn't happen today. If that happened last night and we got crappy macro data this morning, then we would have had a pretty tough pre-market, in my opinion. But given those things didn't happen, I think yesterday was a bump in the road. I think eventually we'll have to deal with this problem of 2 rate cuts versus 3 rate cuts. Quite frankly, I think we're going to get more rate cuts next year. It's just the Fed saying, hey, based on the data we're seeing right now, we can't guarantee a rate cut, which is basically what the Fed is supposed to do. They're supposed to not give you a guarantee. They're supposed to give you a summary of economic projections. And those projections turned out to be a little bit against what the market expected. But I don't think that's the reason the market crashed. I think the lack of clarity around why we're cutting today and Jay Powell's inability to really articulate a meaningful answer around the labor market is the reason we crashed. And that wasn't even the reason we crashed. That was just the reason that was put on the pedestal for the actual reason for why we crashed, which was that the market wanted a pullback. That's it. The market wanted a little bit of a pullback, and they wanted a little bit of a pullback before we get towards the end of the year. That pullback happened yesterday. I think it was a good day to buy the dip. And today we're going to see if the market actually believes that that was a small pullback, or does the market believe that that is going to be a pullback that lasts for a longer period of time. And those are my thoughts and my recap on what kind of happened yesterday in the equity market. So here's the question. Who bought the dip? Who bought the dip yesterday? Who's buying the dip in the pre-market? I'm curious. I talked to a bunch of people yesterday. There were a decent amount of folks that told me they were buying the dip. Again, not that many people said they were afraid. You know why? Because the entire market got afraid, and that's when you buy the dip. Look at the fear and greed index. We went from greed to fear in the course of a day after a 3% pullback. I mean, like when we get that fearful in the course of hours, less than 24 hours, then it kind of begs the question, well, wait a second. Does it deserve to have that much fear as what we're looking at right now? And it looks like the broader market said probably not. Doug said he bought the dip. Miguel bought the dip. Cole bought the dip. Andy bought the dip. A lot of you guys. Yep, I'm seeing a lot of you guys buying the dip. Bsaw bought Tesla, Amazon, MicroStrategy, Robinhood. John bought the dip. It is barely a dip. That's fair. I mean, 3% is not. Now, some names have a real dip. S&P 3% is a little bit of a dip. But it's not a crazy dip for an S&P that's up as much as it is this year. But yeah, it wasn't a massive dip. Certain names definitely had a little bit more of a dip. Selling puts yesterday as well. Palantir did not dip. That's correct. Palantir's up another 3%. By the way, we got some Palantir news. We'll talk about that in a second. But yeah, selling puts yesterday was amazing. I mean, puts were up like 300, 400%. If you got it, the time to sell puts is when things are red, right? Because then the premiums go up. And if you believe in the company and you believe that, you know, the stock will still not be able to get to that strike price, or if it does get to that strike price, you're fine with owning those stocks, then yesterday was a great day to collect premium across the entire market if you were selling puts. And you know, these are the days where people come in and try to take advantage of what's going on. So it makes sense if people bought the dip as well yesterday. Okay, cool. So those are my thoughts in terms of what happened yesterday. I think overall we're going to be okay. I think we're going to end out the year in a pretty productive level. I think buying the dip made sense yesterday. I think buying the dip today makes sense. I can't really see any massive thing from now until the end of the year outside of some black swan event that would really cause another further 5% decline. Could it happen from a just pure technical perspective? Yes, but I don't really see it. Now, one thing that is important yesterday or to tomorrow, which is another reason we fell, and I actually forgot about this last night, is tomorrow is quad witching day. Quad witching. So quadruple witching right here refers to the simultaneous expiration 4 times a year of stock options, index futures, and index futures options derivative contracts. The fourth type of contract involving quadruple witching is a single stock futures, which hasn't traded in the U.S. since 2020 and was never a major contributor to equity trading volumes. What is now effectively triple witching occurs on the third Friday of March, June, September, and December. Equity trading volumes tend to rise on these days and is typically heaviest during the last hour of trading as traders adjust their portfolios. As Doug says right there, calls and puts have to get wrecked tomorrow. Exactly. So this is another reason market makers, hedge funds, etc., probably wanted a little bit of a dip. You got a lot of puts, a lot of calls expiring tomorrow. You got a lot of hedge funds that are trying to make sure they get the benefit of all the different expirations that are happening, index contracts, index futures, stock options, etc. And because of all of that, that's where you got another reason for why the markets ultimately could have fell yesterday. Okay, you guys are saying, look at HIMS. What's going on with HIMS? What's going on with HIMS? And then we'll talk about Palantir. Palantir got a new contract yesterday. Okay, HIMS is down almost 9%. What's going on? This is more volatile than MicroStrategy. Like every day it's 5 or 6%. Every day. Oh, FDA news. FDA news. What is the FDA news? What did the FDA do? The FDA, I'm trying to find the news. FDA, there was some, probably something about GLP-1. FDA took trizepatide off the shortage list. Okay. Looks like that'll do it. Looks like that'll do it. So, okay. So I don't fully understand the HIM story as well, but basically that means that if it's off the shortage list, that means there is so correct me if I'm wrong. That means there's an oversupply of these drugs, which means HIMS doesn't really have a substantial amount of, or there's not a really supply and demand balance, because if there's so much trizepatide, then HIMS is not, like, anyone can basically sell it, correct? Is that the argument? I think that's the argument. No moat. Well, I mean, the growth is good, but yeah, I think the argument around moat is definitely a hard one about that. So if they took it off the shortage list, I think there's a couple of scenarios for it. Where's Eli Lilly? Is Eli Lilly tanking here? Eli Lilly, Lilly's up. Novo Nordisk. What about that one? That one's down a little bit. HIMS is the one the most. Doug says there is not an oversupply. They're still very expensive, but the right to sell the drug was returned to the original inventor. Okay. That'll definitely get HIMS. I mean, if the right to sell the drug was returned to the original inventor, that'll definitely get HIMS. So HIMS is not allowed to sell at all. There you go. All right. Well, that's HIMS. I mean, look, if you got into HIMS this year, you had to remember that a lot of what gave them momentum was not the selling of pills to stop ED, but rather it was GLP and Ozempic that they got into that business. And that business has a lot of different things in regard to the FDA, lawsuits, Eli Lilly, original inventors, all that stuff. And I don't know if that takes HIMS back down to 17, like we saw when the Amazon news was announced in terms of competing with them. But yeah, it could definitely take it down. And right now you're seeing a 9% decline right here on HIMS as well. And that's the problem that we're seeing. Okay, cool. That's what we got with HIMS. HIMS is down. Let's move on to Palantir. So yesterday we got to deal with Palantir. Not a bad deal at all. Army Vantage partnership, 4 years, $400 million. So yesterday I thought, and a lot of other people in the Palantir community thought, that this was going to be a 1 year, $119 million extension. It turned out to be a 4-year, $400 million extension with an actual ceiling of $618 million. And as you can see right here, we can definitely confirm this because it says this will be an Army data platform that leads through 2028. Why are you guys saying I'm talking so fast? Am I talking faster than normal today? I feel like I'm talking like multiple comments like you're talking fast. I'm like, I feel like I'm talking like I normally talk every day. I didn't do that much blow this morning. I don't feel like I should. Am I really talking that fast today, bro? Really? Like, is it? I feel like I'm talking like normal. Am I really talking that fast? My wife said that you were talking fast today. No, maybe a bit excited, but normal. The reason I'm asking, because I'm like, there's been so many bugs with YouTube. I'm like, is YouTube speeding me up or something? There's been so many bugs with StreamYard and YouTube all week. I'm like, I hope it's not streaming me up for no reason, because I don't think I'm talking that fast. But I'll try to slow down a little bit. Dan Ives syndrome. Well, Dan Ives talks much slower than me. That's for sure. So I mean, always okay. So I'll try to slow down a little bit. Are you on hymns? No, I'm not on hymns today. I'm not. I just want to make sure like it's not YouTube, dude, because I don't trust YouTube and StreamYard this week. Yesterday on the market closed, they ended the stream at like 3:37 p.m. and we had to start a brand new one. The screen just went black, and I was like, the whole platform this week has just been not friendly, just been messing up a ton of things. So hopefully it's not okay. All right. Aliens have you going at light speed? Yeah, I think the aliens shut it off yesterday. I really do think the aliens shut it off. Anyway, Palantir, 4 years, $400 million. Palantir got a upgrade today for all right, I'm kidding. All right, Palantir got an upgrade today for $400 million. Exciting. So the Army Data Vantage platform is a really important one because ultimately this platform is a data platform that actually allows the Army to become more effective. So Aki Jain, which I had a chance to meet at the Army Navy game, he said right here, Palantir is proud to support the Army's commitment to a more efficient, data-driven decision through the successful expansion of the Vantage program. Our continuous addition of the new AI capabilities enables the Army's own ability to develop applications and incorporate the benefits of effective data analysis across every high-priority mission in the Army. $618 million we could get from this. We got $400 million. Palantir stock not really being affected by this. Even last night when it was announced, I think we were up like 1%. It's definitely baked in. By the way, HIMS is getting hit right now. HIMS is down 13%. But we are up in the pre-markets primarily because I think that markets are recovering and Palantir probably didn't deserve to fall 5% yesterday. Like most stocks didn't deserve to fall 5% yesterday as well. So you got Palantir right there, 73.70 in the pre-markets, up 3%. Nice Army Vantage contract. We probably were going to get this contract, so it was no surprise to the markets. We've gotten this contract for over 6 years, and thankfully we got it last night as well as an extension into the next 4 years. So that's what we got in the context of Palantir. Now, quickly, let's talk about Micron. Micron had a really crappy earnings. Sorry for anyone who's in this name. You're going to just kind of have to thug it out right here. Micron's down 11%. The only reason Micron's down is because they lowered guidance expectations. Data center revenue was up 440%, which was incredible, right? That was amazing for data center revenues. But the problem was data center revenues was not what the street cared about. The street cared about guidance. And unfortunately, guidance was just not as strong as the street expected. So the street wanted about 7.7 to 8 the street wanted 8.97 billion. They're saying they're going to do at the low end 7.7 versus 8.1 billion, which is about, 800 million below what the street expected. And if that's the case, that's just not going to be as much as what the street ultimately wanted to see. So from that perspective, look, Micron, does it deserve to be down 11%? I don't think so. I also think it reported on one of the worst days. I'm not buying the dip on Micron because I still believe that memory storage is a bit more commoditized in the semiconductor space. But that is, one of the things that happened yesterday. And that is another reason why semiconductors took a hit and why we're still seeing some weakness in that broader market currently right now. Huge miss on guidance by Micron. Yeah, it was not pretty. It was down 17% at one point yesterday. It was not exciting to see that currently right now. Amedia's grab a buy right now. I bought grab yesterday. I mean, if it stays under 5, I'll probably try to buy some more today. Yes, in my opinion, I like grab. I bought grab yesterday. I think at these levels, I mean, grab is falling algorithmically with the rest of the market. Again, a lot of these stocks, what changed from yesterday at 4 p.m. to from 9:30 a.m.? Nothing. I mean, nothing really changed other than Jay Powell had a crappy press conference. That's it. And so even SoundHound, look at that, up 7.46%. When you see nothing pretty much change, NVIDIA up 2.34% as well, that's the best day to buy. I mean, I feel like that's when you should be the most excited to buy as well. Particularly because, those are the days where you get asymmetric returns. Like my cousin yesterday, my cousin was like texting me and she was like, this was one of the first, like, I think she has $100,000 portfolio. It went down 10,000 and she was like, Amit, I'm scared. I was like, no, you should be happy. Like you're 23. You're not going to be selling these stocks for the next 10 years. Like you should be so happy that like you haven't a chance to buy Robinhood again at the low 30s, right? Or at the mid 30s, not that you have to buy at 42, especially because you like these names. You like SoFi. She's into these. She likes PayPal. She's into Tesla. Like you have these names, buy them while they're cheap and don't get sad about it. Embrace the fear. And I think everyone at some point, has to remember that is one of the most important things. We got a Google partnership right here. Google's up 1% in the pre-markets. Oh boy, this is a big one. This is a big one, folks. We have a big Google partnership today. This is big. This one, it's actually a company I'm invested in as well. I am privately invested in this company and Google just partnered with them. Holy crap. This is pretty bullish for Tesla as well. Google just partnered with Apptronik, the humanoid robotic company. Google and Apptronik, I'm privately invested in Apptronik. I invested in them in February. They just partnered with Google DeepMind Robotics to accelerate the advancement on AI-powered humanoid robots. Holy freaking crap. Okay, CEO of Apptronik. We're building a future where humanoid robots address urgent global challenges by combining Apptronik's cutting-edge robotics platform with the Google DeepMind Robotics team's unparalleled AI expertise. We're creating intelligent, versatile, and safe robots that will transform industries and improve lives. United by a shared commitment to excellence, our two companies are poised to redefine the future of humanoid robotics. This is big for Optimus, this is big for Figure, and this is very big for Google. So why does this matter for Optimus? First of all, if Google, the $2 trillion company, is saying, hey, we are going to work with a humanoid robotic startup, which is relatively unknown. I mean, Apptronik, I invested in them because I think they have potential, but I mean, they're not Figure in terms of the brand recognition. They're definitely not Optimus. They're not sending their robots out to Kim Kardashian. If Google tapped them on the shoulder and said, we want to work with you with Google DeepMind, aka the physical embodiment of AI being combined with the research that Google has been doing for 10 years with AI, that means that Google is thinking the market for humanoid robotics is not going away anytime soon. Is this competition for Tesla? Yes, but this is validation for Tesla more than anything. For anyone that was doubting Tesla's route in regards to going down the Optimus humanoid robotics sector, this Google announcement today, Tesla right here up 2.4% in the pre-market, should pretty much tell you humanoid robotics are here, and they're not, and they're here to stay. What does this say about Boston Dynamics, dude? Boston Dynamics is, Boston Dynamics at this point is kind of a joke to me. I mean, like they've had 10 years to kind of figure out humanoid robotics and they really haven't figured it out. Figure is already shipping out robots to freaking commercial customers. And Brett Adcock, CEO, tweeted yesterday that their first robots shipped and now they're fully functional inside of their commercial customers' facilities. It's just a totally different paradigmatic approach in terms of how the humanoid robotics startups are thinking of this versus the old legacy players in robots. But the fact that Apptronik just partnered with Google, this is a very, very big deal. It means the market is recognizing that Google's getting ready to make a play on humanoid robots. That's what I'm reading this as right now. From the press release, Google's DeepMind Robotics team has been at the forefront of AI and robotics. It brings together world-class expertise from machine learning, engineering, and physical simulation around the hardest challenges facing the development of AI-powered robots. From pioneering advancements in foundation models to leveraging state-of-the-art AI models like Gemini for robotics, Google's DeepMind Robotics team is developing the most advanced AI systems capable of reasoning and taking action in the real world. There you go. That's what you got. Not bad. Not bad for Google either. Not bad for Google, not bad for Tesla, not bad for Figure. This market's getting bigger and bigger and bigger, and the best way to get exposure to it is Tesla right now. But Google making a play. Google up 1.36% currently right now in the pre-markets. All right, HIMS is down 15%. HIMS is really getting hit. I am not buying the dip on HIMS. I don't understand the business that well. I also don't understand what this lawsuit that the FDA announced today, or this decision that the FDA announced today is going to have in terms of impacts for the business long term. I don't even know if this is an overreaction or underreaction. I really don't know because I don't understand the business that well. But put in the chat if you're buying HIMS today and let me know your logic if you are. The one thing I do know is that if you're buying HIMS, you got to be ready for more of these because they're in an industry where these lawsuits, these FDA decisions are going to be rampant. They're not going away. And HIMS is, if they want to sell bootleg Ozempic, then they're going to be in the middle of this. And this is going to be important as well. All right, HIMS right here, down 15%. HIMS is down 15%. Yeah, we talked about the Palantir contract, $400 million contract from the U.S. Army. Amazing for Palantir. Palantir crying up 3.5% right now in the pre-markets. They potentially could get $600 million from that contract. So good that they got the extension for 4 years, $400 million. It's kind of 50-50. Some of you are saying we're buying HIMS. Some of you guys are saying we're not. I have no idea. I just don't know enough about HIMS to get excited about this. Maybe if it gets down to like $15, if it gets there. I mean, it got to 17 a couple weeks ago. It's not like it can't happen, but if it's down 16%, you would think that buyers step in if they're bullish on this. So, we'll see when the market opens kind of how this thing's out. Oh, $80 price target from UBS. Yeah, so I forgot to mention that. So Palantir got an $80 price target as well from UBS. I haven't been able to find the report, so I can't read why they upgraded Palantir to $80. I'm trying to find the report. If anyone has it, let me know or send me the tweet. But UBS upgraded Palantir to $80. That is now the highest price target on the street. I don't really know if I can, really trust UBS because they haven't been part of the story for a long time. Like I really only trust Dan and Mariana because like they've been following the stock since it was $10. UBS wants to get in the party when it's at 80. That's great. You're welcome to join the party. I don't know if you're like the best analyst to look at when it comes to these reports, but we did get a new upgrade for Palantir at $80. Again, a lot of these firms also, they're going to start chasing Palantir. They're going to start throwing random price targets. We're seeing this with Tesla as well. You got to find the sources you trust because a lot of these guys will just try to like say, oh, we were on the Palantir train. It's $80. It's like, well, you don't really know anything about Palantir, right? So I would be interested in reading the report. What exactly are they saying? How do they come to this conclusion? How do they get to $80? Until then, Dan and Mariana are kind of the only ones that I really trust on this. Look at the 10-year. It doesn't make you nervous. Okay, the 10-year absolutely makes me nervous. So I forgot to show you guys the 10-year. The 10-year was 3.7 2 weeks ago. The 10-year is at 4.5 right now. However, although this 10-year is making, I think, everyone nervous, along with mortgage rates nervous as well, the problem is earnings growth is still really good. And so, again, this goes back to why would you sell off Amazon right here? Why would you sell off Google right here? Like, realistically, Google at 190, which we already know it's relatively cheap compared to the other Mac 7. Why do you sell it off because of the 10-year? You don't. No rational person says, oh, the 10-year is at 4.5. I'm going to sell off Google and buy the 10-year. Like, no one does that because you think Google is probably going to give you more than 4.5%. So you don't sell Google and buy the 10-year. You definitely don't sell Google as we're cutting rates. Remember, we're going to cut rates. We're going to cut rates. Even if we're not going to cut as much as the Fed wants, we are cutting rates, which is bullish. It's just not as bullish as the market wanted. So instead of going to maybe 7,000 on the S&P like Oppenheimer or Deutsche Bank said, maybe we go to 6,400 by the end of the year, which is not horrible. That's not bad. Markets should still do relatively well, even if it doesn't go up that high. But it just means it might not be as crazy as some of the biggest bulls said that would happen. Did Austin get engaged? Congratulations in the chat. And I'm seeing some ring fingers. Hold on. Is Austin getting engaged? Austin said, thanks, everyone. Let me see. Did you get engaged? I'm missing your comment right here. Hold on. Shout out to you, man, getting engaged. That is not bad at all. I said that's not bad at all. Like this, like a stock going up 2%. I was like, oh, that's not bad. The stock's up 2%. All right, there we go. Austin, last night I used some of my gains and bought my girlfriend a ring. Your boy's engaged. There we go. Congratulations to Mr. Austin. Austin is a mod. He's been part of this chat for like, what, 2 years, Austin? You've been watching for 2 years? Congratulations to you, brother. That is awesome. That's not bad at all, you know? That's not bad. Congratulations, man. Getting engaged. How old are you, Austin? Are you like, I think you're 30 or a little bit below 30? That's incredible, bro. That is absolutely incredible. I was having a conversation with a friend last night about this. He's up a lot on Palantir, and he's like, yo, I'm thinking of getting a Lamborghini Urus. I was like, first of all, shut the hell up. You're not getting a Lambo. But then he did say, well, what is the point of these gains if I don't spend some of it? I'm like, fair, but you're not getting a Lambo. You're not doing that with your Palantir gains. But it does go to show, like, when you have a girlfriend that you want to get married to, sometimes you got to sell off some stocks and do what you got to do to start the next version of your life. So congratulations, Austin. That is absolutely incredible. And 29 years old. Oh, that's amazing. That's amazing. That's amazing. There you go. There you go. You are now engaged. I should ring the bell for you. When we ring the bell in the market open, even though the bell is going to be muted because this mic is being weird, that will be ringing the bell for your engagement as well. Congratulations to you, brother. That is absolutely incredible. All right, cool. So we got 2 minutes until the market opens. This is going to be a very important day. Let's do all eyes on Tesla and kind of see what happens with Tesla. Again, guys, right here, 427, if you can see that on the screen, $427.02 was the 3:45 p.m. intraday low that we saw yesterday. Every stock besides HIMS has not breached their 3:45 p.m. intraday low from December 18th. And until we reach those levels, which was the literally bottom of the market yesterday, then I think this could be a massive buy the dip, and this could be a nice August 5th mini version 2. And now we just got to see how the market reacts. Now we just got to see how the market reacts to this as well. Amit's ad-libs are not bad at all. Hello, everybody. That is it. I couldn't even avoid it when I was saying congratulations to you, Austin. I didn't even know how to. That's really good. That's awesome. Not bad at all. You're up 3% on the engagements. This is how I talk, bro. This is literally how I talk now. I was saying it the other day. I was talking to my sister about it. I was like, yeah, but I'm kind of bearish on that. And she's like, what? She's like, what? She's like, it's like, what are you talking? Like, no, I'm kind of bearish. She's like, what does that mean? I was like, oh, I mean, like, oh, I don't like that much. And she's like, what is bearish? Like, what are you saying? It was so funny. I was like, it's just how I talk now. It's just how I talk. All right, here we go. Very, very important day. We got a lot of headlines to discuss, a lot of stuff to still talk about from yesterday. We'll go deeper into some macro stuff. Dan Ives will be on in 1 hour, and we will be asking Dan Ives about his 2024 and his expectations for 2025. He issued a new buy rating on a stock today. We'll talk about that in 15 seconds when the market opens. So we'll have a lot to talk about today as well once Dan Ives comes on the show in about an hour. All right, here we go. Thursday, December 19th, 9:30 a.m. The stock market once again is open. Wake your ass up. Here we go. Tesla, 451.99, up 2.66% in the market open at 9:30 a.m. You got Tesla with a nice green candle. That is not too bad. The bell was muted. Okay, so the microphone is giving all of you guys a Christmas gift by muting the bell every single day. So for everyone who hates the bell, congratulations. The mic is helping you out. Tesla right here, 451, up 2.5%. Google partnered with Apptronic today, up 1.9%, 193.80 currently on Google, 73.59 on Palantir. Up 2.9% on the day. Hoodie's up 3%, 38.17. Not bad for Hood. That's up 3%. HIMS is down 8%. Wow, look at that recovery on HIMS. Look at that recovery on HIMS, bro. Look at that freaking recovery. HIMS, 25.84. It was down 15%. Now it's down 9%. Where's Grab? Are we tanking on Grab? We are tanking on Grab. Well, not really tanking, but it's down 1.2%. This is the lowest levels we've seen probably in about a month. So we got Grab right there at 483. That one is going down about 1.6%. Robinhood 38.33. That's up 3.38%. S&P 500 up 1%. S&P 500 was down 3%. It's up 1%. Not bad. Palantir 4.8%. $75. That's up 5% on the day. That is not bad. Again, we got a $400 million contract with the Army Vantage 4-year extension. So that's very good. $400 million, potential $600 million. So that's great for Palantir. SoFi is up 3.6%. It was down 5% yesterday. So it makes sense that SoFi is recovering right here. Still not back to 17, but I think we'll get back to 17. NVIDIA is up 2%. Rocket Lab's up 4.2%. Open Doors up 3%. Bitcoin 102,000. TLT's down about 1.2% because that 10-year is being very stubborn. Marathon's up 5%. CleanSpark's up 5%. Coinbase is up 4%. MicroStrategy, which dipped to 338 yesterday at 3:45 p.m. That's at 364. That's up 4%. The VIX is down about 20% right now. Berkshire is up about 1.2%. BidX is up about 3.38%. Nucleus is up 32%. This stock has gone from 5 million to 200 million in market cap in 3 days. They are now halted as the market opens. So you got Nuke, that's halted. Nubank is down. No, Nubank's up 2.5%. Meta's up 2%. Archer's up 4.5%. Archer held up really nice yesterday. Archer was one of the only stocks that was green or like barely red when the market closed yesterday, even though the broader market was tanking. So Archer, there's a lot of strength in that name as the market goes higher. By the way, Oklo is up 4%. Dan Ives initiated coverage on Oklo today, giving it a $26 price target. Oklo, the nuclear fission reactor company with Sam Altman on the as the chairman, got an upgrade by Mr. Dan Ives. I'll be asking him today, why is he upgrading this stock? Why is he initiating coverage? Again, Oklo doesn't really have earnings, but they have a lot of backlog in terms of deals and potential for deals. So you got Dan Ives that's hopping on the Oklo train, and I imagine his argument's going to be that nuclear energy needs, or AI needs nuclear energy. And Oklo potentially is one of the winners that could help the broader AI system. So that's what we got from Dan Ives on Oklo. SoFi right there, 1592. Not bad on SoFi, up 4.92%. So SoFi having a nice recovery. Yeah, guys, we're having a recovery. If you can't see it by now in the as the market opens, we're having a pretty strong recovery. Now, I don't want to say it's a definitive recovery because we're only 3 minutes into the market open, but I mean, Palantir's up 6%. Robinhood's up almost 4%. The S&P 500's up 1%. The Qs are up 1%. A 3% pullback followed by a 1% recovery is pretty much we've seen every single time in 2024. I mean, think of all the days where we had a crappy day. October when CPI came out, September 6th, Iran, Israel in April when the S&P fell to 493. The next day, people bought the dip. And with a couple days left in the trading year, that is no different in 2025 or 2024. Going into 2025. It looks like that's what's happening right now. Tesla up 2.4%. Now, Tesla fell from 480 to 420. That was a bit overdone. But Tesla going from 488 to 450, I think that's okay, right? I mean, Tesla was up a lot. It's okay for Tesla to have a little bit of a pullback. So I think that one, has to be a little excluded in terms of the extensions because it was so far up. But some of these other names are just recovering to where they were a couple of days ago, which is not that big of a deal. Look at Palantir, 76.10. Palantir's up 6.3%. Grab recovering a little bit as well at 491 from 484. Robinhood trying to get back to $39. Nike's up a little bit. S&P's up. NVIDIA's up. Where's Google with that big partnership with Aptronic today? Google up 2.2%. Not bad on Google. Apple's up 200. Apple's at 248, up about 0.03%. Not a big green day for Apple, but still we got some green. And they got Palantir right there at 76. 1030 slam might still affect the markets. We might see a little bit of a sell-off, but we are not seeing an aggressive continuation of what we saw yesterday, which is not too bad. Does Grab have any upcoming catalysts? No, Grab has 0 upcoming catalysts except earnings. That's going to be the most important thing for Grab. Again, this is one of those companies where earnings growth is really going to be the deciding factor. This is the one chart on Grab that I'll show you guys. Again, for those that haven't got into it, this is why I like this name. Look at their free cash flow. They were doing negative 1.4 billion in free cash flow in Q2 2022. 2 years later, they're doing positive 497 million. That number is only going to go up and up and up and up and up as the business diversifies. So as free cash flow goes up, and again, they have 6 billion in cash. So what's the market cap right now of Grab? Market cap went all the way down to 19 billion. You're really paying 13 billion for this company because you're buying cash with free cash flow margins that are going up dramatically. That is why I like this name. And if for anyone wondering, well, why is it down from 550? It's up from 350 in January. So when you're up this much, you tend to take a little bit of a pullback. I think that's reasonable. And so even now, if you bought Grab in the beginning of the year, you're up. But if you bought Grab at $5, $5.30, $5.50, yeah, you're down. And you just got to be willing to buy that dip because you are buying in at a much more higher level than what it was in January. Tesla right here at 446. So Tesla getting rejected at that 450 level. Google 194. Google's trying to go back to 200. Micron's down 15%. Micron's down. Hims is down 6%. Hims is having a fantastic recovery. I know 6% is bad, but it was down almost 20%. So you're getting a nice recovery right there on Hims. Where's Lennar? They're a home builder. Lennar is down 4%. Lennar was down about 8% yesterday. They decreased their guidance because obviously mortgage rates are high. People are not buying homes as much, but that's okay because as mortgage rates come down, if interest rates come down, then that should help Lennar. That's just not happening yet. But Lennar right here, down about 4.7% currently right now. Amid, can you ask Dan Ives about SoundHound? Yes, I'll ask him about SoundHound as well. And I'll get his perspective on that when he joins the show. Oklo's over $20. Yep, you got Oklo. That's up right here, up 10% right here. That's probably on the Dan Ives upgrade. Today, Oklo is up currently right now. Nuke is halted already. Yes, that one got halted. That one, I don't know how that one keeps going up, but people just keep coming in. What else do we have currently right now? Bitcoin 102, TLT still down 1.2% against that 10 years being really sticky, not giving him any love. Apple right here, 248, Google 192, the Q's at 519. which is not bad at all. Tesla, yeah, I mean, look, again, Tesla is extended. We all know Tesla's extended, so it makes sense that it's getting a little bit of red. It's got to hold 427. That's the level that we're looking at on Tesla. But it shouldn't surprise anyone from 480 to come back down to the 440s. I mean, like, that happened Tesla was at 487 2 hours before the Fed decision. I mean, it literally, I was like, what? Does Tesla just not care about the Fed anymore? Like, that was the most random pump on Tesla at all-time highs, right before one of the biggest market-moving events of the year. And, now Tesla's down on it. So at those levels, but whoever was buying, they didn't care. And then they ended up caring after, after J Powell ended up speaking. QBTS down 9%. Some of the quantum names is IONQ down. IONQ is up 7%. QBTS is down. We got some of those quantum names. Let me go to the quantum chart that I have. Yeah, right here. So you got Rigidity down 14%. QBTS down 10%. IONQ up 7%. Google is up 2%. And then quantum computing right here. Wow, down 26%. These names are volatile if you're in these names. But long term, if you think there's a thesis, then you kind of just end up DCAing at that point. The investment by Grab is part of the $1 billion fundraise OEO announced in September in a bid to grow its business in India and China and expand into new international markets. Okay, so did Grab make a new investment? Did Grab make a new investment today? Let me see their press releases. No, I don't see that. I don't see the press release news on Grab making an investment. Let's see if on Twitter anyone has that. Grab investment. It's not on their IR page. I'll see if we can find this. Yeah, I don't see that news. If someone can link that news, whoever, Mitesh, can you link that news if you see it in the chat? Because I don't see Grab actually making any investment on their page right now. Eric says, don't be concerned about Tesla. Just a few paper hands left. I got scared yesterday. Well, the other thing about Tesla is I think the upgrades are coming out the wazoo. Yesterday, we got another upgrade to $480 and another upgrade to $515 after that. So, and like the analysts are on board with Tesla being in this range. It's a question now of people towards the end of the year, are they ready to hold it? That's the biggest question. And if they're not ready to hold it, then, it's going to be tough for Tesla to hold these gains. But if they're ready to hold it and they're ready to get through some of the volatility that they're seeing going into 2024, then I think Tesla's going to be okay. Or 2025. That's from 2018. Okay, that's what I thought. If there was a new press release, I think we would have, at least I would have seen it when it comes to Grab. Yeah. So whoever put that in the chat, that is from 2018. That is not for today. The smart analyst think Tesla is going to 650 in 2025. Yeah. And look, I would not rule that out, man. FSD is a real thing. I experienced it the other day. It is very, very real. It is happening. The world is recognizing how important it is. By the way, we talked about Google. By the way, Kris, I know you're big on Google. Google just said that they're partnering with Apptronik today. So Google is getting into the humanoid robotic space. But not only is Google in the humanoid robotic space, they're in the robotaxi space. And take a look at what happened with Waymo yesterday. Waymo, which Google owns a majority of stake in, Waymo announced what they did in 2024, and it's pretty spectacular. 4 million autonomous rides, 10,958 paid trips daily. Riders spent over 11 million hours in Waymo robotaxis, 150,000 paid trips occurring weekly, and the company now operates across 500 square miles, covering 4 major metropolitan areas. This is also big for Tesla because FSD is coming. Waymo is showing that the market opportunity is there. Google just partnered with Apptronik, which is a humanoid robotics company. So Google's basically admitting not only is robotaxi a massive market, and they've got the numbers to back it up, but also humanoid robotics are a massive market, and they just partnered with Apptronik, which is one of the main players in the startup ecosystem for humanoid robotics. Basically, Google right there is setting up the fact that whatever markets Tesla is going after, not only is Google trying to compete in it, but Google is validating that those markets are real. And so when I think we analyze Tesla from what Google's doing, it goes to show that this is a very big market to get into. And Tesla's not slowing down, and obviously Google's not slowing down either. And competition is good. We want there to be many competitors in this race because it means the market gets bigger. It means costs go down for consumers. And it ultimately means there's a very, very big pie for people to try to get a bite out of. Is Uber up? Is Uber up at all? Is Uber down? Uber is up 1.2%. Now, Uber is still kind of flat because it fell yesterday. But Uber's up a little bit today, and the pre-market's up 1.2% currently right now. Also good for NVIDIA on robotics. That is correct. If you've got Google working with Apptronik, that's Google basically saying, hey, we believe in the industry, which means the humanoid robotics industry is going to keep growing, which means they're going to keep buying chips from NVIDIA. There was an upgrade on NVIDIA the other day, and I forgot what firm it was, but the entire upgrade was premised on robotics. And the analyst was just like, no one's talking about the fact that if we have billions of robots, all of them need GPUs. And like, there's only one company that's going to be giving the GPUs. And that's NVIDIA. So, I mean, a lot of this stuff is bullish for the broader tech sector. And again, that's why I think Dan Ives is bullish for the next couple of years, because it's like, are you really going to let the Fed take away the momentum from, NVIDIA getting more demand because there's a billion robots out there by 2030 or by 2035, 2040? Probably not, right? Like interest rates aren't going to have that much of an impact from that perspective. So if you believe in tech and you believe in earnings growth, yes, the macroeconomy matters, but it's just not enough to stop the momentum that we're seeing right now, unless you think valuations are egregious. And look, valuations are extended, but Google trading at 18 times 2026 earnings is not egregious. There's no world in which that's egregious. Some stocks, yeah, kind of egregious. Farcoin being valued at $1 billion. By the way, let's check on our good old Farcoin. That's egregious, but that's not a reason why the broader market needs to necessarily take a hit. Wow. All right, folks. Yesterday, if you were on the market close with me, you saw my disappointment with Tesla being down 11% and Farcoin being up 6%. Well, I don't even know if I should be disappointed or if I should just embrace the simulation that is being on planet Earth right now. Farcoin is up 32%. This is why people are going to quit business school, bro. They're just going to become full-time meme coin traders, because why should you learn about derivatives? Why should you learn about equities? Why should you learn about freaking how inflation rates work? Like why does it matter? Fartcoin, a coin about farts, is up 32%. I mean, honestly, I'm mad at myself yesterday as an analyst, as someone who tries to analyze the markets. My number one takeaway when I saw Fartcoin up 6% yesterday, when Tesla was down 11%, should have immediately been, oh my God, the stock market is stupid, because the entire global financial system is not reacting to whatever stupid glitch happened at 345 in the stock market based on JPOW. It's just the JPOW stock market glitch. It's not Fartcoin. Because the number one thing that should be taking a massive nosedive are meme coins and alternative assets that have no intrinsic value, because if everyone's running for the hills, then they're selling off the stuff that doesn't matter. That's the first thing they sell off before they sell off their Tesla, their Palantir, etc. If they weren't selling Fartcoin, then no one cared. No one cared. And I should have recognized that. And it's pretty obvious right now that that's what's happening. And I mean, that's my biggest indicator for why I feel like this is a buy the dip. Fartcoin cannot survive, robbing it right there at $38, being up at a $1.1 billion market cap while the stock market is down. There's just not enough liquidity to make that happen, unless there is enough liquidity. And if that's the case, then the stock market probably shouldn't be down. The jokes are amazing, though. When it comes to Fartcoin. The jokes yesterday were amazing as well. Rob, thank you for the $10 super chat. Off topic, but do you believe Trump will circumvent the Fed and create a crypto reserve? I don't think the Fed necessarily is contingent on Trump creating a crypto reserve. It's about Congress. As long as Congress approves the funds, right, the power of the purse, for them to be able to establish a crypto reserve, because they're going to be the ones paying for it, or establishing the funds to pay for it, then we're going to get it. That's why Cynthia Loomis is meeting with David Sachs, the AI and crypto czar. By the way, we had Mr. David Sachs follow your boy on Twitter yesterday. So when the time is right, we're definitely going to try to get him on the show. But David Sachs followed yesterday. And he's meeting with Cynthia Luminous. He met with her yesterday in regards to talking about a crypto reserve. David Sachs is super bullish on crypto. So as long as he can lobby Congress to get them to pass the bill, then I think we're going to be okay. But if he can't do that, then yeah, we're still going to be waiting for Trump to figure out a way to get it done. All right, let's listen to the professor. Let's get his thoughts on what's going on in the market. Jeremy Siegel, and then we'll keep going from there. Dan Ives in about 45 minutes. Let's see what he has to say, and then we'll keep going from there.
Thanks, Dom, to talk about the state of the markets following yesterday's big sell-off. Jeremy Siegel is here, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Good morning to you. I think we're all trying to make sense of this. Clearly, the market was caught off guard. I'm actually surprised that the market was caught off guard as much as they are, because if you watch our broadcast, to be somewhat immodest about it, I think Joe and Becky and just about everybody we've had on in the last week or two suggested that we may still get a cut, but we're going to get a hawkish language after that. And the market seems to think that this was some kind of great surprise.
Yeah, I agree with you. And it was exactly as I expect. I actually think it's a healthy development. You know, back in September when they lowered 50 basis points, I said two things. I said, first of all, the neutral rate is much higher than what the Fed has indicated. I think it's between 3.5% and 4%. I also said long-term rates were going up. I've said that on your program several times, and I think they're going to go up more. And that's not necessarily an unhealthy development. Do you know that for the first time in almost 3 years, the 10-year is above the Fed funds rate. And that's a normal situation. I mean, we brought the Fed funds rate. I mean, Powell brought it down yesterday, 4.33%. And as you know, we're 4.5% now on the 10-year. It's normal for long-term interest rates to be above short-term interest rates. We were 3 years in an inverted term structure. That's not an unhealthy situation. So we are actually normalizing the interest rate structure. You could call it recalibrating if you wish.
Right.
But long rates, I think, have a way to go further up.
Well, if that's your sort of base case, how do you think about equities from here?
Well, it's more challenging in 2025 than 2024. But don't forget, one of the reasons why interest rates are going up and why the neutral rate is higher is stronger economic growth. I mean, Powell mentioned that many times in the news conference that GDP growth has surprised on the upside. I mean, that's good for equities. It's bad for bonds, but it is good for equities. Now certainly, inflation has been more stubborn than expected. I still think there's, as he mentioned, some rental lags that I think are going to help us in 2025 get it closer to that 2%. But, higher interest rates don't necessarily mean a bad situation when they're caused by rises in productivity or rises in real GDP. And that's certainly one of the causes of the rise in the long-term rates.
But then do you look at yesterday or today and say, this is a dip, here's an opportunity, or do you say there's going to be a bigger dip?
Well, I thought there was a lot of trend followers, a lot of momentum players. I mean, they were on the train running up Tesla, many of the other Mag 7. That's not a healthy situation. All it takes is a little negative knock and whoop, they jump off the train. And I prefer to see a market more dominated by fundamentals than momentum players just taking the ride. So I actually think market's certainly healthier today than it has been for the last few weeks, where we saw a lot of momentum players.
How do you estimate, factor in, bet on what happens in 2025 to the economy, to the equity market, in the context of the tariff conversation we've been having all morning, in the context of whatever you think tax policy is going to look like?
Yeah, I mean, I think that the tariff is the biggest question. And the immigration question are both big questions that are facing the market. But there's a lot of positive features. However, I don't think we're going to match the gains of 23, 24. I'm really thinking of 0 to 10% probably overall. I mean, look, I think a lot of analysts are saying we're not going to match the gains of 2024, 2023, and there's a shot we don't. But that is the mainstream opinion to take on a day like this. Have you guys noticed kind of how a lot of times the media operates in regards to a lot of these analysts? It's like, I think Jeremy Siegel was talking for a good 2025 like a week ago, right? And now, because we had a nice little correction, interest rates cuts, I know some data has changed, but now he's like, well, we might barely get 10% next year. A lot of this stuff is just, it ebbs and flows. I mean, there's certain days where CNBC is super bullish and every single video they upload is bullish. One bad thing happens, everything gets super bearish. And I think you got to kind of be able to see through that sometimes, because a lot of times people are just reacting to what they're looking at. They don't have an overarching thesis. This is what I love about Dan Ives and Tom Lee. Whether you love them or hate them, they've had a consistent thesis, and they could have been wrong the past 2 years. They just happened to be right, and they've stayed consistent with that thesis as well. So I think for Siegel to be like, well, we're only going to get 2 rate cuts, therefore we're not going to get a massive gain in the S&P next year, maybe, but also maybe not. Maybe earnings growth is so good, as he's mentioned before in the past, that S&P earnings are going to be strong as well. So we're going to have to see, right? No one fully knows, and I don't even have my full thoughts for 2025 kind of lined up. But I do think that yesterday and what Jay Powell did yesterday, I don't think is going to be the defining factor of 2025. I really don't. I think it's something to think about right now, but we've got a lot of data, a lot of earnings, and quite frankly, a lot of new policies that are going to be implemented over the next 6 months. That's going to define what happens in 2025. Not Jay Powell saying we're going to do 2 cuts over 3. At least currently in this moment. Kris, I'm calling Kris. Let's get him on the show. Let's get his take on what is going on with the markets and what he thought about from Jay Powell's presser as well.
Let's get his Farcoin thesis as well. Let's see. Let's see what it says. Kris, what's up? Good morning.
Hey, dude. Good morning.
Good morning, Kris. Can you start off by please giving us your Farcoin thesis?
There is no thesis, man. I mean, usually when you see things run like this, it means that there is a bubble out there. You know, it's similar to when .com came around and you had diapers.com, or you remember 2021 when everyone was into different SPACs. Like, remember that SPAC that did like energy by moving blocks? Like,
yeah,
and then they went out of business.
It was a lot of fraud.
When you look back at these things, it's like, what?
Okay, so what was your initial reaction to what JPOW did yesterday? And then we'll get into like what that means for 2025. But what do you think happened yesterday?
I mean, look, the market's on fire, right? Everyone's done really well this year. Companies' earnings are strong. Unemployment is relatively, modest. So I think Jay Powell had to do what he had to do and just kind of temper expectations a little bit before they ran too hot. So I think he took a measured approach, which is fine. The one thing I have to just remind everyone is that, when the Fed chair kind of like is trying to temper down expectations, that means the economy is doing really well. He's not lowering cut expectations because the economy is in the gutter and businesses are not doing well. Businesses are doing well. They're continuing to add, a lot of profitability to their business models, and growth is there. So that's one thing. The one thing that I have to just look at right now is the impacts of a strong dollar combined with higher interest rates are really bad for international markets, because what ends up happening now is that, imagine trying to trade into the US, you're going to be buying a lot of dollars. And if the dollar is like as strong as it is right now, that might kind of like slow things down. But I mean, there's a saying that I think, what's his name? Josh Brown said on CNBC that I always refer back to. There's not a lot of great places to invest outside of the United States. So a lot of money is coming into the US and US equities. You've got, and the thing that he typically says is Europe is a museum, China is a prison, and Japan is an old age home, right?
Right.
And that's proving out to be the truth, because I mean, you look at China, China is not really investable right this second. They're still going through their recovery mode. Japan is doing okay, but they've got demographic issues. Europeans have gone full blown socialist, so that's not a place you want to be investing economically. So you got to look elsewhere.
How do you reconcile this 10-year at 4.5, and what is it going to take to get it to come down?
Well, I think naturally it will come down next year based on what I'm seeing with shelter data. So a lot of inventory is coming to market. Like Lennar really gave a highlight that, it's like they're in the business of selling homes. Okay. So they're seeing a slowdown in the rate of people, buying homes. Now, why are people not buying as many homes? Well, number one, interest rates are really high, and that's actually impacting their business.
Right.
Just like it's impacting everyone else. Now, the one thing I've been seeing is just inventory of existing homes is starting to accelerate into this market. There's a lot of inventory sitting around 90 days plus, not being sold. Then, if you look at the if you go to the Fred website and you look at vacant rentals, it's starting to get up there. It's but it's literally like 3 million something, which is close to pre-pandemic levels. So all those things have a drag on shelter costs, and shelter being such a large part of the CPI mix, it's definitely going to show up next year. So I think Jay Powell and the Fed, I'm not saying they're getting it wrong, but I'm saying that they might be a little bit too early in their assessment that they're only going to need 2 cuts. I think it's actually going to be closer to 4.
Wait. Why you think it's closer to 4? Because you think inflation will surprise to the downside next year?
Yeah. I think it's going to surprise to the downside by a good margin. I'm telling you, shelter is the main thing that hasn't rolled over in the data. And I think it's much harder to roll that data over because shelter is just so illiquid. And so once that freight train is moving in one direction, and that's on a downward movement in terms of inflation, then you're not gonna have a very good reason for reacceleration, unless the Fed goes into like pumping mode again. But then again, you also have the Doge Commission too, right? So Doge is likely to recommend a lot of things when it comes to spending cuts. And you're already seeing the impacts of that, where right now, yesterday there was a whole Twitter battle with the new continuing resolution where, the federal government wanted to tack on another 300 bill, not 300, I think it was 100 bill. Yeah, I don't know how much it was, but it was a pretty egregious amount onto the debt. Some of it was necessary, like the disaster relief, but then there was a lot of pork that was built into the whole thing as well.
Meaning there was a lot of random stuff that they were just trying to get passed for no reason. Basically.
Yeah. And so I think if this is, in my opinion, a highlight of what the next 3 to 4 years, maybe actually 2 years, that the Doge Commission said that they would close at in 2026. But basically, you're going to see like this public shaming of government officials trying to spend more than they should. And I think that will eventually come down into the businesses, right? So what ends up happening is the government is one of the largest buyers and sellers of goods and services. And, you have all these transfer payments from the federal government to everyone else. So if that channel starts to get cut, what you're going to see is inflation come down significantly, So I think one of the things that we've seen over the last 5 years is just this explosion in government spending. And some of it was due, of course, because of higher interest rates for the last couple of years. But outside of that, it's still been going up in an unsustainable manner. Our GDP is doing really well, but that doesn't mean that, we should always be tacking on more and more debt. And then in the future, we get to a point where we can't service that debt without dealing with tons of additional deficit spending. That's the thing that worries people about, okay, right now we can definitely pay our credit card bill because we have a great job and everything is going up. The problems tend to arise where if we have an economic downturn in the future and we still have this massive debt pile, people are going to say, oh, well, I don't want to invest in the U.S. Like, I don't want to give these guys money,
right?
And then you have this, like I said, once you get into, it's like a credit card, it's like borrowing on a credit card, right? Like as long as your income is going up, people will lend you money. But it's also kind of poisonous because the more money that you take on and the more debt you tack on, the more likely it is that one day you're going to default on it. And when you do come too close to being in a position where you're defaulting, then you have to start making the hardest choices of your life and basically selling off like all the items that might have been, like nice to live in, like a house or a nicer car.
So Kris, let me ask you, based on yesterday's dip, is this a buy the dip to you?
I would say just be cautious for the next 5 weeks, only because there's a lot of uncertainty in the markets right now ahead of the inauguration. So I'd say just keep an eye on that. We are getting to the point where, like everyone says, oh, the Santa Claus rally, December. Usually December is a pretty good month. But that doesn't mean that we can't have a fallout. Like remember, if you look at the all-time highs and all-time lows, December 2021 was the peak, right?
Yeah.
So just keep that in mind when you're looking at the current markets and what's actually going on. The question is, will there be a catalyst that causes a huge movement down? And as far as I can tell, there isn't a catalyst on the horizon outside of possibly some industries and some names.
So let me ask another question. If this is not a buy the dip to you, or like a cautious buy the dip, is this a time to be panicked based on what we saw yesterday?
No, panic is not the right word right now. I'd say just don't, this is not the time where you want to just sell your entire portfolio and be like, I'm going 100% cash. Like that's probably the wrong move right now. What I do think is, it's just when you see a giant dip, don't be like, oh my God, there's an opportunity to get in.
Right.
Be patient. Let the markets consolidate. Let the fear work its way through the system. And if the fear gets bad enough and valuations are really good, then pick some stuff up. And the other thing is right now, this is definitely a stock picker's market versus just buy the index and hold. The reason why I say that is because if you look at the S&P 500 and like especially the Mag 7, or Mag 8 now, if you look at the Mag 8, there are names within the Mag 8 that are super extended, like Tesla. Tesla's trading at like 170 PE, and their growth rate is actually slowing down. But then if you look at something like Google's revenue and profitability is expanding, and they only have a PE of about 25 with a forward PE of 20. So you have to pick and choose where you want to be in this market. You can't just rely on, I'm just going to buy the index. And yes, I agree with Jeremy Siegel that next year we could see a 5 to 10% year where there's not that great of a year that we had this year.
Yeah.
But that's only on the back of, hey, if you're just basing your entire investment thesis on just the indexes, then yeah, you're probably going to either underperform or you're going to perform at the rate of the market. Versus if you're good at what you're doing, you pick the right companies, you definitely have room to outperform the general markets. So.
Yeah, that's fair. Kris, I just last couple minutes here, I just want to throw some random names at you and just get a quick sentence, bullish or bearish, on some of these names, because these are names that are getting some popularity right now. And if you don't know anything about it, then feel free to say nothing. AMD.
AMD, I know a lot of YouTubers and people have been really bullish on AMD lately as it goes down. I don't see any catalysts for them to really recover outside of maybe they're going to be directly competing with NVDA, which doesn't seem to be the case. And then also at the same time, remember their possible future growth is going to be hampered by all these hyperscalers doing their own chips. Right. So why do they need AMD? Why do they need Intel? And hell, why do they even need a lot of NVIDIA? I mean, sure, NVIDIA is great, but if you could supplement a lot of stuff by utilizing your own silicon, why are you paying the NVIDIA tax? So I'd say be careful of the chip makers. I'm not particularly interested in that sector. So
Amazon.
Great business, huge moat. They're not going anywhere. They're going to benefit directly from all the spend in AI. So Amazon is probably one of the most perfect businesses that you could be in right now. So huge bull on Amazon, huge bull on Google.
MSTR.
MicroStrategy, volatility. If you know how to play the volatility, you'll make money. If you don't, and you're just a buy and hold, unfortunately, you better be careful because the bottom could fall out at any time, and then you have to climb that wall of worry and also deal. So I personally, I think it's a little too stressful to be an MSTR. Everything hangs on the words of Michael Saylor, so I'd rather avoid it. I'm more of a Mara guy, where I think I've figured out the gamma trading portion of Mara. So I know what the baseline is and I know what the ceilings are. So I can somewhat comfortably buy the dips and sell the rips. And it's been doing really well. So I think I'm going to keep doing that for a little bit, but eventually I'm going to move out of that position as well.
You're basically wheeling Marathon. You don't really wheel too much, but you're selling puts and selling calls against Marathon, right?
Because the volatility is great for option sellers. When you have all this volatility, it's when things go down, it's oh, great. I can sell some puts, some cash secured puts. When it goes up, sell sell covered calls. And it's a great way to make money as long as the volatility stays. If the volatility goes away, then I'm out. I'll stick to the traditional equities, which are my bread and butter anyway. So
Microsoft, they got raised to 550, I think, by JP Morgan today. Do you think Microsoft's going to $4 trillion?
I mean, it's great business. I don't think Microsoft is going anywhere. For someone who's a really, really big long-term investor, Microsoft's a great place to be. But I think there's more opportunities than other value plays out there, especially Google right now, who's honestly, if you look at the information, they are catching up on AI it's nobody's business. All right. You look at VO2 versus I think Sora, the improvements on VO2 are huge. And then you have Sundar literally almost every week of the day has been releasing new products. And I've started using some of the stuff like Notebook LM. AI is a phenomenal thing. But I think on top of it, when you look at the business model AI cloud consumption, right? And all three of the hyperscalers are going to benefit from that, which is Azure, GCP, and AWS. But the key is GCP is actually the most undervalued. So if you look at Google right now, where it is versus Azure, it's crazy. The market gains that Google is having right now with regards to growth in its cloud business. So I'd say I like Microsoft, but I'd rather be in Google.
Okay, last two for you. Nubank.
Nubank and Grab and Mercado Libre, all three businesses are great businesses outside of the country. I love all three of them. The only thing to worry about is FX headwinds with the strong dollar, because these are all U.S. listed companies that are going to have to report in U.S. dollars. And so if your local currency is getting hit hard, that means that your earnings are going to also get, somewhat.
Does the market tend to be forgiving on FX headwinds or no?
I mean, it does here and there, but I mean, in the short term, no, they're not forgiving. But in the long term, it doesn't really matter, because what ends up happening is there's going to be times where dollar goes down and it becomes a little weaker and things get better, right? So I think it's in the short term, yeah, the market cares. In the long term, the market doesn't care. The key is the business growing in its local markets? Is it able to pick up market share? Is it able to keep growing at a sustainable level? Then yeah, that's where you want to be. Like if you look at Mercado Libre and Nubank, they have significant presence in Brazil, and the Brazilian real is absolutely getting torn up right now, right? So which means the profitability for them is still okay, but the problem is when you look at it from FX, it ends up impacting your earnings. So like Grab had that whole issue last quarter as well, where their actual growth rate was 20%, but when they reported, it was 17%.
Oh, really?
A 3% headwind.
I didn't know that. I thought it was only 17. It was actually 20, huh?
Yeah. The growth rate was 20%, but once again, headwinds affected them, and so those currency headwinds ended up taking down their revenue growth by 3%. So that's the key with like Mercado Libre and Nubank, where right now, because the Brazilian real is getting absolutely destroyed, when they report, they're going to have to report those FX headwinds, and the market may not look at that favorably. So
right. All right.
That's one of the risks. That's one of the biggest risks when you invest internationally and you're a U.S. investor, is that you're looking at things from the perspective of a U.S. investor with U.S. dollars. But if that local currency is going down in value, then it's kind of hurts you as a U.S. person. Whereas if you're a U.S. business who typically does business primarily in the U.S., you don't really care, because you're getting paid in dollars and you're selling goods and services in dollars. So it doesn't make a difference to you. Yeah.
Okay, last one for you is Hims. This one down 9% because of some FDA thing. Are you interested at all in this thing?
I think there's a lot of competitors in the space doing the same thing, which is the GLP-1 medications and stuff. I think Hims is a very well-run business, but I don't know what the true value is for the company in the long-term future, only because there's just a lot of competitors. It's definitely not a 0 to 1 stock. Like if you look at what Peter Thiel says, what's the thing when people say that they have a unique business model? They probably don't. And when they say that they have a lot of competition, they have pretty much no competition.
Right.
So I think in this thing, sometimes when you hear Hims, it's like, oh no, they're the only ones that do this whole like unique thing. And I'm like, yeah, that's not necessarily true. So from a competitive moat side, they've got really great customer service, but that's, in my opinion, not the most durable moat. Like people eventually will march with their dollars. So if they can get the same product at a cheaper price from other places, then there's a level of customer service that you definitely want to have. But then there's also like a price point where you're not going to say like, oh yeah, I'm going to pay $100 so that the guy on the other side of the phone is saying good morning to me. So I'd say just be cautious of businesses that don't necessarily have that huge moat. And remember, they don't have any IP, right? A lot of the stuff that they sell is all generic stuff. So unlike a pharmaceutical company where you have a patent or access, like limited access to consumers have limited access to certain products that you can mark up. These guys don't exactly have that. So,
okay, actual last one for you. Micron's down 17%. It recovered a little bit in the pre-markets and then it just gave it all away. Do you think they just reported on a bad day and they're one of the more unloved semis? Or, do you have any thoughts on why this one's taking a hit this bad?
Well, it goes back to, once again, to competition, right? like memory is not really a competitive. I mean, memory is not really like a unique thing. Like, yeah, Micron is a great company, but you know, so is SK Hynix. So is what's the other? There's like 3 or 4 major like.
I think even
brands.
Samsung does some stuff in the memory space, I think.
Yeah. There's just memory is one of those things that's just all over the place. So it's hard to say that, oh yeah, like our revenue grew really well this year, but our competitors are not kind of like lowering prices and catching up also. So, you know, this is not like NVIDIA. NVIDIA has a unique business, a unique product that if you want to do AI, you're going to have to buy, you know, NVIDIA GPUs, unless you have your own silicon, which is the newer fear, which is why the expectations on NVIDIA have been somewhat dialed back. But the point is, there isn't a big durable moat in the memory business. So, you know.
All right. Thank you, Kris. Putting Chris's Twitter in the chat.
Well, yeah, if there's one thing you got to ask Dan Ives is that when he tries to come up with his methodology, does he ever use any fundamentals, or does he just look at like, oh yeah, I just see this as a growth, like does he use numbers at all?
I think I've already asked him that a while ago. He's going to say the same thing. I know what he's going to say. He's going to say that macro and valuations is not something that he looks about when coming up with a thesis around if a company has a moat, because I've heard him talk about this before. So I don't think he looks at numbers at all, quite frankly.
I mean, think he just pretty much looks at like the validation of like the data points and just say, you know what, like I see a lot more. And I mean, I get that investing style. Like Chris Camillo uses that. He doesn't necessarily look at the numbers, and he just says, oh yeah, you know what, I see a lot more adoption in this product, I'm going to buy. Oh, I don't see as much adoption, I'm going to sell. Like that's the kind of logic that he used, which is fine. That's a very Peter Lynch way of doing things. Peter Lynch also always did that. Like, you know, no one gave, like, I think he used that example with the 13 like high schoolers. Like high schoolers didn't look at like the numbers on Gap, but they said that, yeah, a lot more people were buying Gap shoes, so the numbers are going to follow that trend. So maybe that's one thing that Dan Ives has as a unique insight that other analysts like myself sometimes miss, in that he focuses on product more than focusing on numbers, and thus he ends up somewhat being right more than someone like me who's a little bit more numbers focused.
Yeah, and look, he's had a good year. He's been right. He kind of assumed it would have a good macro backdrop, which it has been for the past 2 years. And then he just picked some of the winners, right? And the reason I respect him so much is because he's not flip-flopped. Even on August 5th, he said, nope, like, you know, like if you believe in NVIDIA, you're not going to not believe in it because of the yen carry trade, right?
Some of my Google thesis is based on that as well. So like, not only am I incorporating, yeah, like the numbers are really good for Google and they look really good, but I'm also looking at like the release of new products and the innovation level at Google. And I'm just like, wait a second, like they got autonomous taxis, they've got, you know, that are getting adopted really well. So screw the numbers. Like that's just a business you want to be in, where everything is working out really well. But then I also have like this inside, it's like, yeah, but the numbers make sense too. So why not? You got the best of both worlds. You got the momentum from adoption of technology and you've got great numbers. So that's like a match made in heaven for someone like me. So yeah, makes sense.
Right.
Ask him about Google. I'd love to hear his thoughts on Waymo because he is in the tech space. So,
all right, we'll do. Thank you, Kris. Appreciate it. Talk to you later. Yep. Bye. All right. So markets are slightly down a little bit right now. 10:15. We got the 10:30 slam potentially coming up. Nothing too crazy though. Bitcoin's down a little bit. S&P still green, even though we're down. Haven't gone red for the day, which is good. Even holding some green on a day like today after what happened yesterday, I think is very bullish. Yeah, S&P still up more than 0.5% right now. It was at 593. Now it's at 590. I mean, look, if things were going to get as bad as they were yesterday, I think you would see a continuation of a sell-off. And it's very reminiscent to August 5th through August 7th. I mean, we just saw within the first 5 hours, much less the first 5 days after August 5th, people started coming in. They started buying. And, you know, it's either going to be a bull trap, but if it's a bull trap, and for those that believe it's a bull trap, what is the reason? Dan Ives will be on in 15 minutes, guys. He'll be on at 10:30. What is the reason for why bulls are getting trapped? Meaning, what is the underlying bearish argument in the markets right now that deserves to be fleshed out into a correction? And I don't know if you could say interest rates or inflation is that reason, right? You definitely can't say earnings growth. Maybe you could say valuation, I guess, but like, the market took a nice little hit yesterday. Valuations did get corrected to an extent. So I don't know. What is that underlying thing that's trapping the bulls that they can't see, right? Why are people buying right now in terms of a bull trap that is unimaginable to see? I don't really know if that's there, because we already got all the data from JPAL. We got a bunch of macro data today. We got a bunch of earnings growth over the past 2 weeks. There's got to be something bigger that's there. BOJ interest rates next month, probably, maybe, but I don't know if Japan's hiking next month, dude. If they're not hiking in December, they're probably going to wait a few months before they hike. And I think, they're not going to want to piss Trump off. That is a real thing. I mean, if they raise rates, Trump's going to be upset. And there's just a lot of these political dynamics in regards to raising rates. By the way, they don't need to raise rates. Japan doesn't need to strengthen their currency. There's nothing amazing happens in Japan. It doesn't fix any of their problems if they strengthen their currency. It only hurts more people investing in Japan if the Japanese yen gets stronger. So I think it stays lower, or at least it stays lower for the next few months before it happens. Amit, to be honest, the dip wasn't that large. Yeah, that's fair as well. The dip wasn't that large. On certain names, there was, again, Tesla was 11%. Is that really a large dip? Not really, because Tesla was at all-time high, so it's just kind of getting back to normal. But still, theoretically, 11% down was bad. But yeah, across most names, it was not an aggressive dip. So that is also a very fair point as well. Jet said it's just not the time to buy. Penny stocks running wild. Nuke, PRFX. Does it feel like 2021? I mean, yeah, with these penny stocks, it does. I mean, look at the quantum names today. Quantum names are getting screwed. Rigidity down 21%. QUBT down 31%. QBTS down 21%. I mean, like on a day like this, when everything's recovering and these three names are down upwards of 25%, yeah, these are some of the names that are getting hit because they've just had wild runs when they might not, were supposed to have those crazy runs, right? Unless all that money was flowing in. So we do see a little bit of correction in some of those names, but then you got other names like Nuke that are up another 400% or whatever. Okay, now it's down 5%, but still, it was up almost 30% this morning. Those names are getting fleshed out a little bit. What else? Kohler is running like crazy. Yes, this one as well. This battery name. This one's up another 19%. Hit $2. Again, market cap is 590 million. I think. Let me just look at this chart, dude. This thing was 10 cents in January, and it was 30 cents in October. Now it's $2.48. I don't know if anything fundamental changed to get this company to be at this level. This is the CEO, by the way, who tweeted that he loves his diamond hand shareholders and that he's thinking of putting Bitcoin on the balance sheet. It's the CEO of Kohler, is the guy who tweeted that. So when you see stuff like that, again, it could still be a winner, but it's definitely just makes you just a little cautious before you get into it. Also, the other thing that happened yesterday is people could have been taking profits too, right? Like, and again, that could have been a little bit of panic profits, but in general, if you're up a ton on Tesla and you see it go down 10% and you bought Tesla at like 180 and you have like 10,000 shares, you might take off 1,000 shares off the table if it goes down 10% just to protect those initial, profits that you got from investing earlier this year. So I think yesterday could have been a compounded effect of people selling. Now, that might have not been the best idea given it was more algorithmic selling that made retail want to sell as well. But I definitely think there was some retail that was selling. I did not sell anything yesterday. There was not even a thought in my mind of like, oh, let me take some, like not even for a millisecond that I think, oh, I need to take some profits. And who thought yesterday to take profits? Who thought yesterday like, oh, I should sell? I don't think a lot of people did. I really don't think a lot of people were like, oh, I got to get out of these names. I got to take some profits. I think most people were like, all right, is this happening? Like, is this serious? Like, what's going on right now? Right. And then people realize, all right, well, we'll just hold on. Even if we're not buying the dip, we'll hold on a little bit. Algos did, right? Yeah. Most of you guys are saying you did not even, I didn't, just not even for a second that I think, oh, let me sell some Robinhood. Let me sell some Palantir. Let me sell some options. Like, no, I was just like, this is kind of dumb. And there's no reason to really sell here. Let's just leave it. Austin said, I bought yesterday. Yeah, I think a lot of people did. I think a ton of people did. The drop says since I'm 70% cash, there's no point in reducing my exposure. Okay, let's do this. What percentage of cash are you? Put it in the chat. What percentage of cash? I'm 0, bro. Dude, I barely have enough money in my bank account. Like, I have nothing, bro. 0 cash. I'm all in. All in. Who has cash? I hope I see some like 10% in the chat. Otherwise, everyone's degenerate. We're all in. Okay, we got some 2% cash by Doug, 15% cash. Gene says, I hate cash. That's fair. Alex 15%. Gary, I'm 100% Palantir. Tess is 5% cash. All right. Most of you guys are like 10 to 20%, I would say. Most of you guys are 10 to 20%. Ryan says I have $300. Dude, the amount of times Bank of America has texted me and they're like, hey, admit, you don't have any money in your account. And I'm like, hey, Bank of America, that's because you guys don't pay any interest. So like, shut the hell up. You're only there because like I need you to pay some bills because I can't pay them with Robinhood. Otherwise, I would ditch you guys. Years ago, I would have ditched you guys. If Robinhood could let me pay bills from my Robinhood account, bro, I would not have a Bank of America. That's a lie because I have a business checking account, so I have to have a Bank of America. But like still, I don't care about Bank of America at all. At all. I remember I called one of the ladies a couple of years ago because they charged me a fee, and I was like, guys, I've been with you guys for like 8 years. Like, this is a stupid fee. Like, I got my check the day after I paid it. Like, it's not that serious. And she was like, well, no, sir, we can't do it. I'm like, you really can't do anything? You really can't do it? I was so mad because I was like, this is just so dumb. I think that's why people like SoFi as well, because there's no stupid fees. Because SoFi is not trying to nickel and dime you. Like, a bank that has trillions of dollars in assets doesn't need a $30 overdraft fee. But they still do that because that's how they think it's another way to get some money out of consumers. Whereas SoFi has a totally different business model. And SoFi is just like, we don't need to nickel and dime you. And so I think that's why a lot of people are ditching some of these banks as well. Boomer momentum. No, dude, I was like 21 when I remember this day. It was like 5 years ago. I was so upset one day because I was like, I don't deserve this fee, bro. Like I've been a loyal customer for years. This is dumb. And I legit took the time out of my day to call them up. And the lady was just like, yeah, GG. And I'm like, all right, I am not going to be a happy customer of Bank of America ever. Now, granted, their stock did very well. Their stock has gone up like 30% this year. So stock of B of A has done not too bad. Exactly. And SoFi pays 4% of my savings account. That's correct as well. I mean, dude, like if SoFi just had a better app, again, I'm not a fan of their app. If they just had some engineers that could really make this app enjoyable, I think they would steal even more business from these guys. But like every time I get into the app, I'm just like, oh, this is like the experience of SoFi versus Robinhood to me is night and day. And again, I don't think it's that hard. I mean, you just got to get some really good engineers, give them a shit ton of stock and say, build me one of the best user experiences ever. Even if it takes a year, like I feel like so many more people would be excited to use it from that perspective. But it gets the job done. That's the most important thing. And that's what's getting people away from the big banks as well. Bank of America's app is not that much better, by the way. So SoFi's probably way better than Bank of America. Bank of America is a pain to log into every day. This is not that much better. MSTR is tanking. Whereas MSTR, oof, that's down 2%. HIMS is down 9%. Not really finding that much recovery. Tesla's still green. Grab is green. Apple's green. Is Hoodie going down? Hood going down. Hood is slightly up. It's close to being red, but it's holding on to 37 right now. Admit I'm a UX strategist. They should hire me. Pratik, you should literally tweet at Noto because he's on Twitter all day. You should be like, Noto, you guys need some better UX. He might respond. He might legit respond. They did hit 10 million members, though. We talked about that 2 days ago. SoFi had 10 million members. So I think SoFi earnings are going to be good, bro. I mean, 10 million members, they're going to put up a lot more profits than what the street's expecting, and they're probably going to raise guidance for 2025. So I think SoFi is going to have a good quarter. Bitcoin's below 100. Oh my gosh. Why do people keep selling this thing? Why can't people just leave it alone? Why? Goodness gracious. Doug says SoFi earnings are never good. No, Doug, SoFi earnings are always good. The market reaction is never good. So that's fair. The market reaction might suck, and then that's an easy buy the dip. But they're going to triple B. I think it's going to be a good triple B. I think it'll be a good one. But the market might not love them. Even Robinhood, dude. Robinhood earnings reactions are not good. Robinhood's either flat or down on earnings. And then after a couple days, it like just immediately picks up because the street's like, holy crap, this is amazing. SoFi is just like 10% down. So, I don't know why. No, it goes 10% up, then 10% down. And then it falls throughout the day. I remember last time they were at like 950, then they went back to like 780, and then they rebounded to like $9, and then they got to $10 the next day. That was also like a decent time to get into SoFi as well. Rotation into Fartcoin. Is Fartcoin going down? Okay, Fartcoin's down from 118 to 107, but it's still up 18% today. Why? Doug says you missed my double negative humor. Doug, you know, my sense of humor can never compare to your sense of humor. Your sense of humor is far beyond mine. So you got that one. Why do people have to sell Bitcoin, bro? Like, why can't like this is why I was upset about Farcoin yesterday, because Bitcoin, we've gone through the thesis a billion times, but still, when things get dicey, people get out of it because they're like, it's not real, right? And they just leave. How do people stay in Fartcoin but not Bitcoin? And that's why I was pissed off yesterday, because I was like, this makes no sense. Like, this is not real. Like, you can't tell me people are selling off Bitcoin, which is Bitcoin, but they're holding Fartcoin. And so it's one of those things that always makes you wonder, when markets tank, you tend to see a bit of a massive downside towards like speculative names. And I don't know what's more speculative than Fartcoin, but we didn't see that yesterday. So it's really annoying that people are buying Fartcoin right now and not selling Bitcoin. And that's literally what's happening. Fartcoin's up 6%, Bitcoin's down 2%. And I don't know if that is a sign of too much froth. I don't know, but that is annoying. SoFi's red and Tesla's red. All right, folks, we got Robinhood red. Hims is red. Nubank's about to go red. Amazon's up 1.62. Amazon's holding up. Uber is red. Tesla is red. SoFi is red. Grab is red. Mega caps are holding on by a thread, but they're still down. Micron, this is just nasty, bro. Micron is nasty. I mean, this is a nasty 18% decline. That's just not fun. If you're in Micron, that's not fun. 111 to 85, off of a 400% year-over-year growth in data center revenue quarter. That just means the market doesn't like trust Micron. They just don't see any value in Micron, even with the growth. I mean, they're putting up the numbers, but they're just not putting up enough of the numbers in terms of guidance for the market to get excited. 1030 dip. Yeah, it's probably 1030 dip as well. Gold is down. Gold is down. That is also correct. People gamble, admit they're not investing. Yeah, I know. I get people are gambling, but $1 billion are in Fartcoin. So when you have $1 billion in the crypto markets that are rotating from Bitcoin or Ethereum or Solana to Fartcoin, it makes you wonder how much money's out there that's available to gamble, right? Or are they selling Bitcoin because they're up so much that they feel like gambling with a portion of their profits? And that is all signs of like, hey, there's a lot of money in the system. Again, I don't think it's as like 2021. That was a little bit more aggressive, but it's undeniable seeing these small caps and crypto names run up. There is some more money. I don't think that means you sell equities, because I think earnings growth is so good, but it does mean there's a little bit more froth. We're just not seeing it as dramatic in large caps. Like when Meta was $1 trillion back in 2021, that made no sense, right? That is like real froth, because like you just can't justify Meta at those levels. But now Meta at 1.5 is like theoretically undervalued. So if the froth at least exists in the small caps and the speculative names and not the big cap names and the real companies, then I think it's okay. And that's not the worst thing in the world. 1 billion market cap does not equal 1 billion invested. It's much more smaller amount of investment. That's fair. That is fair. I'm just saying, bro, this thing is incredible, dude. Like you could have outperformed everyone this year by investing in Fartcoin. Which again, it's hard to like find those names, but it's just wild that could have happened. All right, guys, we'll have Dan Ives on in a little bit. We got some housing data. Let me go to that real quick, and then we'll have Dan Ives on in just a second.
Adjusted annualized rate of 4.15 million units, sales up 6.1% year over year. That's a beat. The street was looking for a 2.5% gain from October. This count is based on closing, so contracts likely signed in September and October. Mortgage rates had fallen to an 18-month low in September, but then shot higher in October. Now, the supply of homes for sale, 1.33 million units, up 17.7% from November of last year. At the current sales pace, that is still just a 3.8-month supply. 6 months is considered balance between buyer and seller. That pressured prices. The median price in November, $406,100, up 4.7% year over year, and 18% of sales went above list price. First-time buyers gained some ground. 30% of November sales, up from 27% the month before. Slightly lower than a year ago, though. Cash is still king at 25% of sales, and investors pulled back. Just 13% of sales, down from 18% in November of last year. And I do want to note that mortgage rates shot up yesterday after the Fed announcement, up 21 basis points to well over 7%, 7.13%. And with bond yields going up again today, David, guess where they're going?
Yeah, higher. I think if I had a guess, that would be my my guess. Diana, thank you. Diana Olick. Well, let's get back to stocks. Of course, they are aiming to bounce back after that very significant late day sell-off after the Fed move and then the all-important press conference and comments from Fed Chair Powell. Mike Santoli, I'd just love to get your take at this point. We're already off the highs. We're up as much as a little over 1% on both the S&P and the NASDAQ when we began trading.
We did get a bit of a reflex bounce. Market was pretty oversold finishing yesterday. There was some acceleration over the course of the afternoon into the close. So we did finish on the lows of the day. Seemed very systematic, too, after a while. Once we were repricing the Fed path and bond yields were doing what they were doing. Now, if you take a look at the S&P 500, where it brought us down to, it's right below its 50-day average. So on a tactical basis, that's now a little bit of a hurdle. It's a little bit above where we are. We popped above it. Now we're below. It's like 59.24 at this point. We're also at the November lows and the October highs in the S&P. So we're kind of just resetting along this plateau. You can see it right there and figuring out what within the market seems like it's already discounted, perhaps, a slightly murkier path for the Fed as well as the economy. Take a look at the NASDAQ 100 relative to the equal weight, because, we've been talking for weeks, right? It was a handful of large stocks along with some really low quality, smaller speculative stuff that's been ripping higher while the average stock has been languishing. And that you see that divergence we had over the last few weeks. Now, yesterday you had a 2.5% drop in the NASDAQ 100. You're bouncing a little bit today, but it does there was a sense of this unbalanced, somewhat brittle market that was hit by what the Fed had to say yesterday. And the economic data this morning, we just heard some of it, and there are also weekly jobless claims, a revision to GDP, all good. So
I agree. If a lot of that is good, especially with the macro data we got this morning, it is kind of hard to think that there's going to be that much downside or that much pressure in terms of the downside that we are currently seeing, or that we saw yesterday as well. All right, folks, here we go. There has been one man who has called this bull market as accurate as you can call it over the last 2 years. He is a friend of the channel. Tesla, Palantir, NVDA, Apple. He has been on the cutting edge of analyzing these companies. He has traveled across the world to make sure his analysis is the right analysis for investors to listen to. Ladies and gentlemen, the man, the myth, the legend, the most stylish man on Wall Street, Mr. Dan Ives. Dan, what's up?
No, it's great to be here. Great. And style. Speaking of that, stylish. Look at that shirt.
We had to bust it out for you, Dan. We got to welcome you to the show. We got 3,500 people here. Had to make sure you have a warm welcome, and I just wanted you to make you feel at home with.
No, it's seriously, man. It's great. I'm so glad this worked out. It's a great kicking off going into holidays, post the Fed sell-off. I mean, it was good because a lot of the bears I haven't heard from in 6 months. I was getting worried about the health and concern. So it was good to hear from them. Last night.
All right. Well, I got a lot of questions I want to ask you, Dan. We're going to talk about your 2025 outlook, but I want to start with this. I think it's very important in life to take a moment and step back and to give people their flowers. You, since the beginning of 2023, decided that this was going to be a tech bull market. And with all the ups and downs, the one thing or the one analyst that I can point to that has been consistent on a thesis, meaning you're trustworthy. People know that you have a thesis, you believe in it, whether the stocks go up or down, you actually care about the argument you're making, is your thesis on the technology and AI revolution that we're in right now. You are one of the most respected analysts on Wall Street. Tesla, Palantir, NVIDIA, and a lot of other names you have called incredibly correct. My question to you is, how do you feel as an analyst on Wall Street? And do you feel like your brand has finally gotten the respect that you've worked 30 years to build?
Yeah, no, and thanks for that intro. Look, I feel like I'm not someone that look, as I always say, haters hate, right? So I never worry about in terms of just broader, you're always gonna have the critics and stuff like that. My biggest thing that's been very rewarding is traveling around the globe, whether it's institutional, whether it's in a random hotel, a waiter in Warsaw or someplace in throughout Asia where someone comes up to you in a hotel and they're like, hey, I didn't listen to my advisor or the haters or the negative, the black swan event. I listened to you, and because of you, X, Y, and Z have happened. You've changed my life. So I found it more rewarding because a lot of my career, the only people that benefited were institutions, right? Whether it was Apple in the early days, to have Microsoft, Amazon. and now, especially like the last few years, like sort of post COVID, being on Twitter, like or whatever, X, like just being more like out there, I feel like I've been able to take a lot of that and more toward like, especially like a lot of the retail community. So it's been actually like very rewarding from that perspective.
Well, I think it has to be rewarding because a lot of retail investors listen to you over, their financial advisors. And when you say, hey, at NVIDIA on August 5th, $90 is a steal, and then NVIDIA goes to 140, I mean, I would imagine people have a lot of affinity for you, respect for you, and that has to feel good because that's your job.
But it's also like sticking with the theme. And also it's like, look, man, like 3.5 million, whatever miles travel my career, like around the globe we see it. So that's the other thing, is that a lot of the bears, like, just because you're wearing a fleece, no sleeves, in the 10th floor in New York City office building doesn't make you smart, right? So the point is like the AI, they can't see in the spreadsheet, you can't see in your townhouse in Marin, you can see it on Metro North. So the point is that by seeing around the globe, you have a different perspective. And we talked to like hundreds of IT manager, sales partners. So that's why a lot of times, like when we've gone through so much of this volatility, I just view it as more like stick to. It's like don't, because it's that confidence. But look, man, like that's how me and you have talked about, like coming out of iPhone launch 2007. Remember, then the haters like, oh, BlackBerry, this is a joke. They're gonna take it. Like Microsoft, Nadella takes over, going to change the world. Like the view of Musk going back to 2009, 2010. So that it all sort of led on my whole career led up to like just being more and more confident,
Right.
and not getting skewed by event,
Yeah, and I think that's the problem with a lot of analysts is like stock goes up, stock goes down, they react to it because they think they need to. But the definition of a long-term investor is having a theme investing. You could be wrong, everyone's wrong, but if you're right, you hold on to that, because the worst thing to do a lot of times in the market is to sell your winners.
Well, also many analysts too, right? Like in other words, like if you look at historically, the problem is that many, whether it's a hubris thing, like I know it, they don't listen a lot of times to opposite sides. They stay very with the sort of herd. It's easier to stay with the herd instead of going aggressive and being, just different calls. Because sometimes in those different calls, like they go against you. And
Right.
guess what? Like, when they go against you, like, you have to stick with it. Like, so the point is, like, there's been many times in my career, it's like when you're going through, I mean, even if you go back to like Palantir, right? Like, okay, it's work. Remember they had the quarter, like guidance was a little stock goes to like $21. Dude,
Yep.
you're wrong. Does that emails come in left and right, haters left and right. So the point is, like, in those situations, you're like, tune it out, opportunity, move forward.
Okay, last question on that, and then I want to start with Palantir. How do you deal with the haters, and how do you have a thick skin?
Actually, first of all, I like haters because it gives you perspective. You got to understand the bear and the hate. So I think part of the problem is that if you don't listen to the haters, you need to understand the other side of the trade. That's
Right.
that's actually been a big part of my career, like understanding. There's a lot of times I'll do like bull bear arguments, like with institutions, a restaurant with a bear, and then accounts just sit there and wait. I like that. And from a thick skin perspective, I never take anything personally,
Right.
even though a lot of times it is like personal. I just kind of view it as like people are frustrated, right? They're sitting in the basement. Mom's like, "Oh, dude, meatloaf's ready. I'll bring it down." And the point is like, and I get it, and like they're negative on tech, waiting for the Black Swan event. The Bulls are watching college football Saturday. The Bears are focused on the Sri Lankan currency spread blowing out. And I mean, like, the bottom line is, like I told you, like, Bears come out on the weekends because the Bulls are just what? Bears are always wearing Black Swan event. Oh, Fed, geopolitical. Oh, this is the thing. And I've heard for 20 years, right? That's how they missed every transformational tech name the last 2 decades.
Right. That is correct. So let's get into one of the transformational tech names that you called accurately in 2023, around July. I think you initiated coverage. This was a big deal for my community, for me. we've been covering the stock since $6, 2022, wrote it down from 30 to 6.
Yeah.
And to have someone with your brand finally kind of give it a little bit more exposure on Wall Street, that was exciting for us. So I want you to take me back to 2023. What about Palantir got you excited, and how did you decide this was going to be a transformation?
That started like spring of 23, early, like by late 22, early 23, like more and more tech players talking to you throughout the channel, whether it's big tech partners. They're like, look, what Palantir is doing in the enterprise, like it's real, like this technology.
Mm.
And I started to, as I started doing more of the work, I'm like, it basically the bell went off, and I'm like, look, this is government has been their play, but the future is enterprise. And I think it was understanding what AIP could be, and my view of the AI revolution in terms of like, okay, it was going to start off with Godfather of AI, Jensen, NVIDIA, but as you trajectory it out, second, third derivative, Palantir, if unless something dramatic happened, they were so well positioned. And I looked at the stock, and I'm like, look, this is one, like, remember, I own no stock, right? So it was one, like, I just view it as kind of like, from an investor perspective, my job is to find names that are dislocated. And I'm like, this one is like in a career, maybe on two hands. It was a table pounder. And then also understanding like every institutional negative, sell side analyst negative, conspiracy theories, whatever. And it was almost one like, I'm like, oh my God, this could be this could be the one where they, as I always say, like they despise it as a teenager at 12, and then they absolutely pulling their hair out, hate it, despise it when it's a senior citizen, 75, living in Boca Raton. So I love those names, right? Haters, they hate it at 13, despise at 75. So it's just, and also it's confidence, like in the management team, in Carp, Glazer, down, like it's a company that I think you have done so much awesome work on. The retail community, as I've always said, just like Tesla, they were way ahead of the institutional community in terms of understanding this. When you understand the culture of Palantir, dude, we're talking like elite of elite. And I think that's the other thing, like people didn't really understand culture from top down to engineers to software developers to like how much they care about Palantir to the merch and everything else. It's just I think a lot of people don't understand culture.
Well, so let me ask you this question. I don't know if you've been asked this before, but I think this will be interesting. Why, in your opinion, as an institutional analyst, was retail able to get Palantir before your compadres were able to get Palantir?
Because institutional, sometimes they're like, I'm smarter than them. This is it's a group think. They're not part of the cool kid club. What I'm saying is in terms of like, they might names like Snowflake and MongoDB. There's like institutional. Palantir is not someone that like would always at institutional conferences, meeting with investors. They're kind of like an anti. So it was very easy to almost be just like negative on them, is like from a consensus perspective.
Right.
I think, and that comes into the group think. And me and you've talked about before, I think that's how like whether it's Tesla, NVIDIA, Microsoft, Apple, haters, stocks going to 50, now it's going to 4 trillion market cap. It's like it's very easy if you just get caught up in the consensus institutional, you end up like you just miss these historic moves, and then they stay stubborn. No, I'm doubling down on my hate. No, dude, Brady out of Michigan, he was now they won 2 Super Bowls. No, I don't think it's work. And then you're like, you always have that friend who's like at the sports bar, like you're just getting like hanging out. They'll say like the provocative statements, like, I don't think Jordan was the best basketball player. Dude, I don't think thing about that is the equivalent from a stock perspective. And that's why like guys like that, you're like, okay, you're deleted out of the text group, not invited to the next thing. Just the nature of it.
You got the green bubbles. We need
exactly. Look, green bubble. You always have to beware, right? Like when they have the green bubbles in the text.
Last question on Palantir, then we'll get to Tesla. Use cases. That has been kind of your core thesis. Is that something that you also felt the analysts don't understand how many use cases?
Totally, because they're not doing the work at boot camps, talking to customers, seeing it, looking at the demos, understand it. And I think to me, it was the use cases, not understanding. And then also, as I always say, the bears can't find AI in the spreadsheets when they're sitting in the caves, right?
No.
So the point is that that's how they've missed every transformational tech name from Meta to Amazon and Tesla. Because you have to be someone that understands, okay, let's go 3, 4, 5 years out. Could they get to 5 billion of free cash flow?
Right.
What could AIP get to from a revenue percent? What's some of the parts? Let's put a valuation on AIP and then set a valuation for everything else. That's the thing. Like if you go back, like, and I'll just give Apple as an example, be like, no way this ever gets to 300 billion market cap. Our whole thesis going back 2014, it was like services is the valuation. You build it, then you monetize. That's going to start trading internet multiple. No way, no way. Then you just fight the trend. Next thing you know, as an investor, you're trying to figure out times, Ariel, what font to put on the resume. So the point is that it's the same concept here. You have to be a technologist, a visionary, and understand where these names could go and not sitting there, just trying to focus purely on valuation.
Yeah, and I think there's different paradigms for analyzing companies. Some are numbers and valuations, some are the actual thesis, the moat, the visionaries, the leaders. But like a combination of two are important. And sometimes when you have none of the latter and only the spreadsheet, you end up missing a lot.
But I could give you examples like Salesforce.com in the early days. People not understand Benioff was a visionary. They'd focus on EV to revs, EV to revs, EV to revs. Guess what happens? Free cash flow starts, EPS starts. What happened? Now all of a sudden, you're looking at free cash flow multiples, EBITDA multiples. Now the whole valuation changes. So the point is, like, I'm just not a believer that you can just sit there. Valuation is very important. Okay, eventually companies have to execute to get to that point. But you can't just sit here on transformational tech names and look out over the 1 year. The point is, like, if a team gets Travis Hunter, number 2, are they like, oh, it's just the first year? No, you're focused on coming year. Like, are you getting Juan Soto if you're the Mets just for 1 year? No, it's like, what's this going to look like over the next 5, 7, 8 years? But you have to look at stocks the same way.
Right. Last quick question on Palantir, then we'll move on. Do you think they have real competition?
Mm-mm.
think-
I mean, now look, down the road, 2, 3 years from now, hyperscalers, especially with Con out to FTC, they're going to try to do from an M&A perspective, like they recognize there's a hole.
Right.
The hole is also why like Microsoft, Oracle, I think others down there are going to more and more partner. So there through M&A, there will be others that would try to go after them. Remember, don't really have a direct sales force. So like others are going to go after the market, but it's the same view of NVIDIA. Next 2, 3 years, there is no competition.
Right.
No, see, that's the thing. Like everyone be like, on the stock's telling you something. Like, dude, I go to Asia 5 times a year. Demand supply is 15-1. Like, stock could do what it does, but the point is like they own the market, and that's 2 trillion AI capex. That's not changing. But that's a good example. Like when you look like in Nvidia, it's like, oh, stock's telling you something. I'm like, dude, stock can tell you something. That's fine. I'm just telling you like what I see from fabs and demand. And there's one red phone. It's Jensen.
Yeah, that is very fair. Let's get into Tesla. So speaking of visionaries, you believe Tesla can reach 2 trillion in market cap by the end of 2025.
And that's probably conservative.
Yeah. And that's probably conservative. You were, again, one of the only analysts that through all Elon's ups and downs, through buying Twitter, through getting political, through the judge getting rid of his compensation, you were like, this is an AI autonomous FSD story that's not going anywhere. Why do you think 2 trillion is conservative for Tesla?
Because it's my view that autonomous is probably one of the biggest use cases for AI. And where everything's heading, I think over the next 4 or 5 years, autonomous becomes real. And when you think about where that means, like cyber cabs, like I think you're gonna have a few 100,000 per year out there. You look at Uber and Lyft's market and basically take 20-30% of it, what ultimately could be incremental for Tesla. And then it's the view of FSD penetration. Like FSD penetration, you start to get to true level 4. Like, does it go to 50-60%? That's pure software. What does it do now? Now, just talk about numbers. Do numbers double? Like, in terms from an EPS perspective, over the next 2, 3, 4 years? So that's why, like, the only thing that was stopping this was 202 Beltway. Trump got in. We talked about it right when it happened.
Yep.
Trump getting in, bet for the ages. It's a sweep the leg moment, Karate Kid fans, on some of the regulatory perspective. And now with NITS and everything else, it opens up the opportunity on autonomous.
When you say it's a bet for the ages, I mean, we've seen leaders of history in capitalism, entrepreneurship that need to do some level of lobbying to get their agenda passed, especially if they have a greater goal. How do you interpret the Musk and Trump relationship? Do you kind of think it's weird? Do you think it's what he needs to do? How do you think it's going to get done?
Rockefeller, JP Morgan, Musk. I mean, I'm just trying to explain. We're talking like a modern day, we're talking about modern day, like call modern day Albert Einstein. If you're a lover, hater, whatever, you cannot deny, like, this is a situation where they both need each other. Trump needs Musk, Musk needs Trump.
Correct.
And when I talk about bet for the ages, the biggest thing that was going to derail the story, and you even see some stuff like Delaware, the political spectacle, head scratcher, Twilight Zone that's happened there with the Musk pet. Politically, Musk, bullseye on its back, Biden administration iced out. Look what happened. That Trump comes in. It's like, it's going to change everything. EV tax credits getting pulled. Infrastructure is going to be much more AI driven. And we're already going to start to see that even with Masa and SoftBank, where that's going. Autonomous, there's no federal autonomous roadmap in the US. Like, the point is that they are going to have a federal regulatory roadmap they're going to build for autonomous. And I believe as we go forward, there's going to be a lot of things where, like, you're going to go out 5 years from now and you're going to talk to someone and be like, it's crazy where things are today.
Yeah.
Could you have seen it 5 years ago? No. And I think autonomous is an example of where this is going. And it's my other view. Like, look, come out of Robotaxi today. It's a good example. I'm there. A lot of people maybe on the broadcast were there. Institutionally, next day, disaster, lack of details, disappointment. Right away, I came out. I'm like, dude, this is top 3 day I've ever been to in 25 years. Thousands of events.
Right.
Because it comes down to, like, a lot of the institutional in the spreadsheet, wearing the fleece, no sleeve. They can't see it. They don't, it's not in front of them. It's not spoon fed to them. You see where it goes, and that's my view of, like, where Tesla is heading. Deliveries is 10% of the story now.
It's very similar to me. I've never driven a Tesla. I just recently got one in November.
I remember when you bought, and I remember, like, when you got it, right? You're like, dude, I remember you put the thing out. You're like, I get it.
I get
Like,
it.
I remember you're like, you got it, and you're like, yeah.
And then I tried FSD, and I'm like, and I had my dad, my 60-year-old dad, who was in there, and you would think he would be scared, and he was just like, let's do it. We were in a 20-minute ride. He was like, let's go for another 20 minutes, because it's so transformational to see this robot on wheels drive you around. And as you said, most people like myself haven't experienced it. When they do, they're probably going to upgrade to FSD, and that's like 95% margins on a car company.
But the whole point is, like, if I go back, like, many, like, bears, conspiracy, black swaners, the thing is, if they grew up in the time of, like, horse and buggy, when the Model T comes, they would probably be sitting there drinking tea or whatever, and they'd be like, that's crazy, this Model T, this car. All of a sudden, like, computers come, like, that's a joke. Typewriters, that's where it's going to continue. It's the same thing, because it comes down, like, many people and a lot of investors, they're not visionary. They can't see where everything's heading, and they're always looking for what could go wrong, this and that. But again, that's the alpha, man. It's like it's like I always say, like that is how you make money. It's what makes a market. You have sellers, you have buyers.
Right. Last question on Tesla. I think you conceptualize Optimus as a call option on the stock.
It's 0 for 2 trillion right now. But that's one like that could be. I mean, we could be sitting here a few years from now being like, Optimus could be like a huge part of the story in terms of like my view of robotics.
Right. Okay, let's get into another name that you have made a lot of people a lot of money on, quite frankly, which is a company you also think will hit 4 trillion next year, NVDA. The big question is it's cyclical and eventually it'll pop. What is your response to that?
I think that is a historical view, not recognizing that we're in a fourth industrial revolution and there's only one company in the world that has those chips. Like, so when it comes down to it, I could argue for a stock that could trade at 30 times earnings, if you start to get to a point where they're doing $5.50, $6 earnings, 180 to 200, when you start to look at out year, no, is not, that's not egregious. And for someone like myself that covered .com bubble, 90s, covered it, you're talking about the average company was trading at 30 times revenues, 100 times earnings. So every time someone compares, like, oh, Cisco 99, you know, go to your Christmas dinner, like the uncle, whatever. It's like, oh, look at Cisco 99.com, look at NVIDIA. I'm like, yeah, but here's the difference. Was there 2 trillion AI capex? Who's actually spending it? It's tech companies, 1.2 trillion of cash, and they generate 300 billion of cash a year. This isn't a startup funded late 90. As somebody went through it.
Right. Yeah, and I think it's really interesting because even if we think about Optimus, that's going to need GPUs. And if we talk about a million bots, I mean, it seems like the demand for their product is insatiable and it's not slowing if we're going to come up with GPT-7 one day.
But it's not. But that's and the point. It's people not understanding. Just like we talk about Palantir, it's not understanding Jensen, who he is individually, and the culture. See, people, they don't understand the culture of that company. Is they don't sit there and be like, oh, look where we are today. Options. You know, I could get a crazy car. They view things like we gotta continue to continue to innovate. And that's the difference between them and call a pseudo government agency, Intel, right? Like when you look at Intel, it's exactly the shame that happened to Intel that essentially became almost a beltway regulatory agency.
In the context of NVIDIA's stock movement, we've obviously seen it go through a lot of ups and downs. I'm assuming a lot of that is noise to you because if you believe GPUs are inevitable and they have a monopoly, the stock could be further from.
It's noise. And I hate, again, you say noise and then someone come out like, noise, you loved it at 140, now it's 130. I'm like, yo, like, what do you want? Like, the point is, that's like the sports fan, like watching a game like second quarter being like, oh, like, it's just like, this is a long game.
Yeah.
Like, my view is it's a long game. The only time that I get negative if something structurally changes in a name, then that's you have to like look at the thesis. But when you look in video, when the checks continue to be 15-1 demand and supply, and you look, we're only at 4% enterprise have gone down the AI path. And where numbers ultimately go. I'm not saying you don't have knee-jerk tariff worries, stocks down, people downgrade. But at the end of the day, my view is like this is a long game that we're playing here in terms of where. But it comes down to like, look, man, I could give you examples like Nasdaq's 5,000,
Yeah.
and you're telling people like, remember this, dude. I made plenty of bad calls. I'm sure people will be like, oh, what about this call? But I remember like Nasdaq 5,000, like bull market, 2010, 2011. Oh, what about TARP? This Fed. 2012. Oh, Europe debt, Greek debt crisis. It's over. Oh, look at the Fed deficit. Dude, it's not sustainable. Here's the deal. I get it. But it's just like when we talk about with like Black Swan event, Tokyo, when I was there for Tokyo Black Monday, just happens I was there. This is it. Currency trade done. It's like, has anything structurally changed? Yes or no? The money on the sidelines, 6-7 trillion. Many institutional investors are still very not well positioned. You're gonna
Yeah.
have volatility, but it's like when I look at things like yesterday and Powell, and like you go from 3 or 4 cuts to 2. Here's the question: are we still cutting? Yes. Are we
Yes.
hiking? No.
No.
Are we in a cycle where like we're cutting 100 bips, 125 next like 12, 18, 20, 24 months? Yes. Soft landing? Yes. So AI revolution? Yeah. Trump coming in, deregulatory? Yeah. That's why I'm just not someone that sits there like tomorrow night, like, oh, is the Fed? Oh my, dude, the government's gonna shut down. Like, oh, I'm here. I'm like looking on Kalshi to see like what the betting odds are. It's just like that's the stuff. Dude, those are like the demon type things that mess with the thesis.
Right. AMD has sold off compared to NVIDIA a lot this year. Do you have any thoughts on AMD right here?
I think that's like way oversold. Like it's a good example of like let's just say Google. I'm just giving an example, like Alphabet, like going like 150s, like worries about antitrust. Where that was a table pounder. Like you
Right.
go back to Meta 2 years ago, efficiency. Because Lisa's, it's another example. Like you're betting on Lisa Su. You're betting that they're going to be a player in AI chips. None of that's being factored in. And I think that's one, like, when you look into next year, AMD's could be one of those names where you're like, what? You look back and like, why was the stock so oversold? Because people feel like they're not going to be a benefit. It's not being factored in. But I can look, but look, if you want to go back, like, just go back to like, I'm sitting there at WWDC. Apple's coming out with iPhone, and obviously 16 is going to come out, but there's my Apple Intelligence sitting there in Cupertino. They do it. Stock trades down to like 190.
Yep.
Everyone's like, Bubble Boy, this will age well, had it work, all of a sudden, a hater, this, downgrade. So the point is, like, it's another example of like, okay, now in December, you're looking at stock 250, like, and you haven't even had AI go to China, Apple Intelligence around the world. You haven't had developers build everything out. It's very easy in the moment to get caught up, right? Like in terms of like with like sentiment, stock, that. But look, it's just like I'm not saying like, dude, we're wrong plenty of times, but at least this has always been the way I've done it since late '90s, and that's just our style. And then people could take the opposite view, but that's sort of like how we do it.
Yeah, I think it's very important to just be consistent, and no one's gonna bat 100 when it comes to their stock picks. But having a consistent theme is, I think, why people respect and trust and want to keep listening to you.
Because too many, it's like something happens. Now I'm Nick. That's that's something like I learned early on in my career on Wall Street, like going back to like 2002, 2003, that sometimes like, oh no, downgrade, upgrade. And then you start to realize you're like, look, you like a name long term, stop focusing on this. Focus on this.
I mean, to your credit, even on CrowdStrike's worst day in the past 5 years, you said nothing structurally changed. It's a bad mistake, but the world needs cybersecurity.
But those are the point is like when stocks are up and to the right, you could put your sneakers on and do victory laps. I could care less about that. Where people need you, it's when things like it's like that July 19th day.
Yep.
People call, what do you, I'm like, dude, this, like, no one's pulling out CrowdStrike. This is a disaster. It's a black eye. They're gonna have to do mea culpa. They'll be dealing with lawsuits next 10 years, whatever. But those would be parking tickets. Like the point is like this story is not changing. But it just shows like you have opportunities and names when you have sometimes like in a social media where I'm like, that's it, it's over.
Yeah, no, there's definitely opportunities that can pop up. Dan, last segment, and then we'll get into some quick rapid fire, and then I'll get you out of here. Tariffs and the implication on Apple, Tesla, and NVIDIA. What is your perspective on that?
My perspective is like, look, Musk is going to be heavily involved there. And I mean, I was down in DC like, a few weeks ago. Like, the point is, like, I think there's like, we can go through some like negative headlines and scary stuff, China Hawks, Rubio, Navarro, and everything. The reality is like, I think there's gonna be carve outs for Apple, carve outs for Tesla, carve outs for a lot of AI chips. China's gonna have to come to the table. And I think that's a game of high stakes poker.
Yep.
You just get through. Like, the point is, like, when you play, if I'm playing poker at the win at 3 a.m., like, it's very easy to just like throw the cut. But the point is, like, you got to see where it ultimately goes, right? And I think that's like another good example. I think that the bark will be worse than the bite. It doesn't change the AI trade. And I think that's when it will create a lot of opportunities on headline risk as we go through it.
Right.
Like, you know what I'm saying? Like, headline comes out, stocks are down, like, people are bugging it. But I think that's one, like, I at the end of the day, that would be like it's going to be contained risk to those names.
Yeah, because Trump doesn't want Apple to be a company that suffers. They're in a great American company. So if you have a
And also,
conversation,
it's an understanding. And I've done, like, when I'm in DC, it's like, look, like, oh, you got to build it here. But if you want $3,500 iPhones, build them in New Jersey. If you want them done like $1,000 and made efficiently, you keep them in the China Taiwan supply chain. Now the reality is that, like, more and more, I think there's gonna be AI innovation hubs that are gonna happen in the US. But I think even like the Inflation Reduction Act, there's gonna be a lot of changes there. That's why Intel's on the wrong side of that. And who's on the right? Who's gonna be on the right side? You're seeing a lot more beltway initiatives in government toward Palantir,
yeah,
toward Microsoft, toward Oracle, toward what I view as like Amazon and others. And that's why, like, there's a red carpet at Mar-a-Lago, because everyone understands, like, the AI innovation is going to be happening in the US. First time in 30 years that US is ahead of China when it comes to tech.
right. All right, some rapid fire for you, Dan. First off, Oklo, you initiated coverage today. What's the bull case for Oklo?
It's a second derivative plot, and then, like, my focus on AI, it's like, what's going to be the energy? How are you going to ultimately build out these data centers? I view Akko, like, look, it's pre-revenue company, but if I look at this is one, like, I believe as the energy plays out, this is kind of a second, third derivative play.
Any thoughts on SoundHound?
Look, it's been our favorite small cap, right? I mean, I just think it's one where very easily people could just focus on valuation and hate it. But if you understand the technology, you understand the algorithms, it continues to be one of our favorite names for 25. And I think that
NVIDIA also invested in them as well. Yeah.
But if you focus just on valuation, you miss these stories. I'm not saying stocks don't get ahead of themselves, come down. But my view of, like, SoundHound is, like, this is a name that continues to be, like, they're going to be a long-term player in this market.
Is quantum computing real?
I think it's real. I think the scale is still an issue, but I think you're starting now to get to certain breakthroughs that this becomes a legitimate space that's going to be an investing landscape over the coming years. I think the question is going to be, like, how quickly this ramps.
Right.
And also I go back to, like, Nightmare on Elm Street, Friday the 13th, whatever, like, favorite horror movie was, for tech, she's gone. M&A is going to accelerate. Quantum is going to be one of the key assets that big tech is focused on acquiring.
SpaceX just raised at 350 billion. Are there any space names like Rocket Lab, ASTS that you're interested in, or it's kind of just SpaceX?
I mean, I think SpaceX continues to be unique in that because, like, even I'm not like a fan of, like, the leisure plays. There's Planet Lab, which I think is a good space play from like a data center. I know like they've missed some sort of quarters and stuff, but that's a longer term play. But I just continue to think on space. SpaceX is a little unique there.
Google, did they prove that they actually are innovating with their quantum announcement?
I think Google's a different company than it was 9 months ago, a year. I mean, I can tell you from like all the work that we do there, they are getting their act together when it comes to what's happening, like with Kurian on Google Cloud,
Yep.
GCP, Quantum. You're starting to see more innovation come out of there. It's exciting now what's happened at Google, and it also comes down to like Trump in the antitrust thing. I mean, like DOJ will continue to pursue it. I still view that like very, there'll be business model tweaks, not breakup. Some of that overhang's also starting to get removed.
In general, Dan, are you a believer in the crypto ecosystem?
I'm a believer in the crypto. I'm a believer that I think the bigger thing is that more companies are going to have to start investing in crypto as part of their treasury. And I know Microsoft, whatever, there's been noise there, but I think that's going to be the biggest focus. People talk about U.S. government, but I think more companies, put this way, if you're a public board, you're looking at what sellers and MicroStrategy are doing.
Yeah, you kind of have to.
And I've known Saylor personally. I knew him, back in the late 90s, 2000. Like, he's a visionary individual. And I think it's changed the game. Like, because more and more companies are going to view it as like disruptive tech. Bitcoin is going to continue to play a bigger role. And I think those that are not believers don't really understand the not just supply demand, but I think even some of the use cases when it comes to blockchain and others.
Are you bullish on Meta and Microsoft in 2024?
Oh yeah, I mean, to me, Microsoft is probably one of the biggest names to own on large cap, just because even though its name might maybe like underperformed a little,
right?
When it comes to enterprise, more and more on the workload side, AI. As more of these use cases happen, they're going to be a clear beneficiary. In my view, Meta, you haven't even started to factor in the advertising piece, what that actually could do from an AI perspective. And I think, like, and Zuckerberg's a different individual than he was a few years ago. And I think it's someone also that, is now playing nice in the sandbox.
Last two questions. What time is it at the party?
It's 10 p.m. Now, the point is, like,
we went from 9 to 10, or at least an hour.
It started off at 9. You had some and my point is, like, look, now the Velvet Robes, Benioff comes, like, oh, my name is in the list, you're in. Software, they're in. So now, McDermott's on the dance floor, like, you got Ellison, Safra. The point is, like, cybersecurity, like, they're waiting in line. They're, like, on the Velvet Ropes. Like, I think they get in. And my whole point on the party, it's a great way to explain, like, where this party is. Now, I'm not saying at one point, like, DJ doesn't stop playing music, glass in the dance floor, people hear sirens, think cops are coming to break up the party. You're going to have some of those little moments, but party goes to 4 a.m. They look bears. They're looking at the party through this, like, on the outside. Like, they're sitting there, like, looking at the party through, like, some little sort of, like, little peek in. And they're like, party doesn't look that fun. The party, it doesn't
Party's overvalued.
No, this party seems crazy. I'm gonna go up to my room and watch a C-SPAN. Now, how about this? At 6 a.m., let's meet up at the diner and see who had a better night, Bulls or the Bears. So my whole point is that, like, it's my view where we're talking about a multi-year tech bull market. And again, I'm not one that, like, goes to a party at 10 p.m. and be like, oh, what's going to happen at 5 a.m.?
Right.
You never know, because some of those after parties and other. So that's sort of my view.
Well, if it's a party, I think you're the star of the party for sure. You're the one letting everyone into the party. It's been just so exciting to watch your journey, Dan. And the last question for you is, what do you do for fun? Because you do a lot of media. You're on Bloomberg, you're on CNBC, you're doing my show, which my community deeply, deeply appreciates.
And
You're
it's
doing your
great
actual
great
job.
to come on. Yeah.
You're traveling. Like, do you read books for fun? Do you watch Netflix? How do you
I mean,
just
for
relax?
fun, I'm a sports. I mean, Penn State. Like, I'm a diehard Penn State fan, right? So, and there's like, I mean, college football. I know you went to your first Army Navy game.
Yeah, it was
Like,
awesome.
that is college football is our. It's more than just we're avid fans. I mean, so I think huge college football content, F1, spend time friends, family, and that's really it, man. It's like I like wine, but it's like it doesn't take a lot, right? I'm just like more focused on just like it's just balance and also tune out the noise, right?
Well, here's one question. I want to ask you this selfishly. This year, my career in media, I guess, has
Dude,
gone through.
you've blown up. Exactly. I mean, dude, it's
It-
like I mean, think about it. When I met you, you're wearing like an LL Bean shirt. Now you're dressed like a Visa. So the point is like, look at yeah, exactly.
Well, it's experienced some hyper growth, and with that hyper growth comes a lot of anxiety. And I think a lot of people don't think about this because at the end of the day, you're a creator, you're an analyst, but you're also a creator in terms of the content you're putting out there. The anxiety of losing it, right?
Of
Because
course.
from 0 to 1, you got to get it. You got to get the attention. You got to build the audience, but then you got to maintain it. You got to get the next stock pick right. You got to. Do you suffer a little bit from some of that anxiety of just like, I got to keep doing these interviews. I got to keep getting myself out there?
See, I view it as I never viewed things like in that way. I was never worrying about what about if things go, then I lose. I just kind of view it as like it's just like I just do my stuff day to day, and I don't feel pressure where
Right.
it's like if you go on a bad streak or whatever. And I just kind of view the whole thing as sort of like it's also like being like humble, taking it all in and not being like afraid of like, oh, like what's gonna, because I feel like there's too many people that are always like afraid of like losing it. Instead, I just always view it as like, dude, it's like it's just for me it's kind of been like a step function to build it. You enjoy it along the way, and that's it. And like I'm just not someone that like goes into things being like, oh, but if I go to the game, the traffic after is gonna be crazy. We gotta leave in like the middle of the fourth quarter sprinting through the parking lot.
And I think part of you just enjoying it is your energy is what allows us to enjoy it, whether it's the analogies or the fashion. I think you're just out there having a blast.
But it's fun. But also, I enjoy it too, just because, like, whether there's like, some 14-year-old being like, I've gotten the stocks the last few years watching you. That it's also like, I also view it personally, like passing it on. It's why I talk, I speak at a lot of universities, a lot of high school, a lot of stuff like that, because I'm a believer in like it's creating the next like Amit, Dan, I like it's the because there's too many people like they get somewhere and then they're like it's mine, like I'm smart. I kind of like sort of passing it down.
You pay it forward.
Yeah, it's like you pay it forward, and I'm a big believer in that.
Yeah. I love it. Dan Ives, thank you
Yo,
so
and
much.
thanks for having me, and thanks everyone listening. And it's fun, and it's just also doing it all together too as a community. Well, remember, haters, lovers, happy holidays to everyone. But the point is, like, it's just good going through it together because this is such an exciting time that we just happen to be living in a once in a 40, 50 year revolution.
I agree. And it means the world that you even take the time to come speak to us.
Dude, I really love like everything you and the community do. It's like it's seriously, it's like it's awesome. And I actually tell like a lot of times like institutional or if there's other people, I'm like, yo, dude, they're like, oh, I don't do X. I'm like, that's fine. That's like being like, oh, I don't eat pizza. Like, okay, enjoy it. But the point is like I feel like you get so much out of the community. People I found like people like yourselves, others. I think it's like you understand, I think, a bit more what's going on.
Yeah. I love it. Merry Christmas. Happy holidays, Dan Ives.
Yeah, see you guys.
Thank you. See you next time.
Thank you so much.
Bye-bye. All right. There we go. Mr. Dan Ives. That was awesome, folks. I think we had him for like 50 minutes right here. And we got a lot of his thoughts on a lot of different things that are happening in the markets. Krupa, thank you for the $25 super chat. Fantastic episode. Thank you, Amit. Thank you, Dan. Thank you, Krupa, for the super chat. Really appreciate it. We got to ask him a decent amount of questions. Palantir, Tesla, NVIDIA, SoundHound, Oklo, Tariffs, where he thinks 2025 is going. And, we're getting towards the end of the year, the holidays. I kind of wanted to get to know him more as a person, and getting to know his journey and how he embraces the process of being Dan Ives. I think that was exciting to see. And also, I think in general, you got to give people their flowers when they're here, right? You just got to. He's had a good year. He's had an incredible 2 years. We don't know what the next couple of years will look like. Same thing for me. I've had a good year. I want to keep the momentum going. But while someone's in their prime or having their moment, you definitely want to let them know how much you appreciate them and how grateful you are for them. So Dan's made me a lot of money. I know Dan's made you guys a lot of money. He's kept people's heads level-minded, even when things were tough this year. And he's always been a resource that I think we can rely on as well. There we go. That's what we got from Dan Ives. The Palantir ontologizing a myth thing, I just got a message, is not happening today. That is happening in January. So that is not happening today. Just got the message. Something came up, which makes sense. Palantir engineers probably have to deal with something. So that'll be happening a couple months from now. Not happening today, but that will be really fun. We'll do it live, build an ontology, AIP use cases, everything in front of everyone on the show. But probably not going to be happening today. All right. I think that's pretty much it. First of all, let's take a look at the markets and then we'll be gone for today. Yeah, we got a little bit of red, but I don't know, dude. It's not that crazy. S&P's still up almost 1%. Hood's up a little bit. SoFi's up 1%. Bitcoin back above 100. It was at 98. S&P again, 590. Amazon 225. Grinders grinding along back at 17. Know what I'm talking about? NVIDIA right here, 130. Wow, NVIDIA up 3%. Look at that. Look at that V-shape. Look at NVIDIA. Tesla 439. Tesla's down a little bit, but it's basically flat. Uber's down a little bit. Grab up 0.5%. Apple 251. Apple up another 1%. Google's up 1.3%. Palantir was up 6%. Now it's up 4%. I mean, look, it's not the craziest recovery from yesterday. It's not like an August 6th to August 5th recovery, but it definitely is. All right, we're getting to the end of the year. It's not that big of a deal. Whatever happened yesterday is not blowing up any theses like Dan Ives just talked about. And so you got some money stepping in and buying a little bit of the dip. You got Matt Money right here, increased his Rocket Lab position by 2.5%. That means he bought like 500,000 shares. That's a little 2.5% of Rocket Lab for Mr. Matt Money. But yeah, you got people like Matt buying in as well. And I think a lot of you are buying currently right now and buying some of the dip. And again, I don't think you have to buy. Like I think if you have cash on the side, this is not a dip you have to buy. But if you're in the market, it's definitely not a market you have to sell off because of what happened yesterday. Now granted, if you were looking for some opportunities, we got the first day in months, quite frankly, where we're getting or at least since November 5th, where you're seeing a nice opportunity. But markets can go up and down, and we just got to remember that going into January as well. All right, guys. I think that's pretty much it for today. Nothing else crazy going on. Amit, when are you bringing Carp on the show? I don't know, but maybe one day. Maybe one day we will have the Dr. Carp on the show. Maybe one day. Maybe we will have to see. All right, I think that's it. Nothing else. Market close. We got Nike and FedEx today, so that'll be important earnings. We'll have money market funds coming on Thursday as well after hours. We'll see the money market fund inflows. Is there anything else? No, I think that's it. We'll do word of the day, but I think I think that's pretty much it. Look, markets are not free falling. They're in a bit of recovery. It's probably going to take a couple of days to get their footing behind them. Really, I was looking at some data today. The Santa Claus rally is December 26th to December 31st. So we really got to wait until after Christmas to see if that kind of takes off. But I think it's a great setup because now that we're down 3 or 4%, we can probably go back up 5 or 6%, hopefully. And that could, do really well for the markets. But that's pretty much it. That's pretty much it. Where did you get your shirt from? I got my shirt from Kohl's. It's called Apartment 9, one of my favorite brands. APT9, one of my favorite brands. I haven't worn it in so long. You got the OGs know I used to wear those like every other Friday in 2023. I stopped wearing it, but I had to bust it out for Mr. Dan Ives here today. Okay, cool. Word of the day, and then let's get out of here. Oh, this is a nice word of the day. I like this one. This is a good one. Imprimis or imprimis.
Imprimis.
Okay, I totally got that. Bro, no one could tell me that I was like a I versus a I. But it's imprimis, it's imprimis.
Imprimis.
Okay, I didn't see it like that. But in the first place, the will listed the deceased person's wishes imprimis that the family estate remain intact. Imprimis, the evidence was insufficient to warrant a conviction. Originally, I read the definition as in first place, but not in the first place. The kind of changes it, makes it an adverb. But regardless, if I use the alternative definition, remember Kellyanne Conway in 2016? She was like, "Oh, well, Trump's just saying alternative facts." That was hilarious. Like, "Oh, there's different facts, but they're alternative." The alternative definition of imprimis is that Dan Ives is in first place when it comes to analysts. That's a sentence I came up with, and then I was like, "Oh, this totally changes it." But regardless, been a fun year. Been an exciting year, been super, super cool, super, super fun doing this every single day amid the messy of horrible pronunciations. Dude, imagine Dan Ives correct. Imagine Dan Ives was like, "Yeah, I've been watching your show," and like, you don't know how to say shit. That would be funny. That would be very, very pretty. NVDA is imprimis, correct. NVIDIA is imprimis. All right, that's it. That's it for me. Thank you, everybody. Thank you all for joining. First of all, for the 3,500 people we had live watching that Dan Ives interview, I really appreciate it. That is awesome. I think someone had a comment right here. Amit, what do your parents think of Dan Ives on the show? I think my parents are excited about it. They don't really know who Dan Ives is. I don't think they can. They don't have the time really to care about who Dan Ives is. So in their world, it's like, oh yeah, Amit has a friend joining the show. It's like not that big of a deal to them. But to me, to this community, to everybody else who's been following along the growth, it's a big deal. You know, it's a big deal. And this is like his third time on. So the fact that Dan continues to come on and show love, it matters. You know, it's the same thing I said with Vlad back in February with the Robinhood interview. Like him doing that interview for me was a big solid to my career. And I think he knew that, you know, it obviously was good for him because he was getting, you know, more exposure and he got to kind of rebuild the brand after the GameStop stuff. But I think he knew in that moment that was going to be a very big deal for me because it just gives you a little bit more credibility when you can talk to these people and hopefully do a good job when you're talking to them. And so Dan coming on really means a lot. It means a lot to me, means a lot to the community, means a lot to the growth of the channel. My sister, if I texted her right now, she probably would not care. But then again, she didn't care about meeting Karp or Vlad. She was like, "Oh, that's nice. His hair is a little weird, but that's nice." So there we go. It means a lot. Thank you, everybody, for being here. We'll be back on the market close. Pox, when you say goodbye in the chat, and Mick keeps talking for another half an hour. Dude, we've got to make a compilation of how many times this has happened. We've got to make the timestamps of when I've said, "All right, that's it," and then how much time after, because I think it's like legit on average 15 to 20 minutes, which is kind of wild. I don't know. I don't like leaving. I like being live. I like talking. I don't know. That's just, I guess that's what I like doing. So AIP presentation will happen next month, not this month. Unfortunately, they couldn't do it today. So we'll be doing it next month. Michelle says every day. Dude, I don't know what it is. I just get these things that I want to say at the end. It's like separation anxiety, bro. It's like I can't leave. And then you guys have a billion comments every second, and then it catches me off guard. Who is Travis Hunter? He's the football player, right? Am I not wrong about that? Dude, half of Dan's analogies, I didn't know what the heck he was talking about, bro. There was some analogy he was like, yeah, that's a reference to the show. And I just like, yeah, that's awesome. I just smiled and hope to God he did not say, "You know what I'm talking about?" Because I would have to lie and be like, yeah, I know what you're talking about. Yeah, that's funny. I didn't know what the hell he was talking about, bro. I didn't know. I had no idea. I had no clue. All right. That's it. That's it for me. Thank you, everybody. Appreciate you all. We'll be back for the market close. And that's pretty much it. Oh, these comments are great. All right, I shall leave. Bye, everyone. Have a good one. Why do I always clap when I say goodbye, dude? I don't know what it is about, but then the clap just leads me to last longer. See, now Doug just asked the question, so now I have to stay. This is the problem, bro. This is the freaking problem. Doug, thank you. Amit, when award stream. So I'm going to text you, Doug, and all the other guys in the group, and we'll figure out a day. Probably from December 25th to the 31st. So one of those days, we'll figure it out. And we will have a stock award stream on the show as well. That just says, "Go away, man. I need to work." All right, I'm officially leaving. Bye, everybody. Have a good one. Appreciate you all. Love you all. Thank you for joining the show. And, you know, the really interesting thing about life that I think a lot of people don't. All right, that's it. I'm out of here. Bye, everyone. Have a good one. Good night. I'll be back for the market close. FedEx and Nike after the bell. Bye, everyone. Have a good one.